Morning all, how are we all doing? Morning Peter, morning JC, morning Steve, morning Danny, morning Jerry, morning Virginia, morning Andres, exaupdate.news, morning Amy, John, Virginia. I haven't seen the yen this morning, haven't even looked at the yen this morning. What's the yen doing? Ooh, weak. Morning David, morning Sarah. Is that weak across the board? Yeah, big week move on the yen on Friday after the news. Yeah, big move today so far. Right, let's have a quick look at. I've just banked Aussie CAD. Yeah, Aussie CAD this morning from Friday. I'm contemplating taking Aussie US off as well. So that was the Aussie CAD from the H1M5 mean reversion on Friday, straight up into target. Aussie US, I'm toying with the idea of taking this off as well. I've still got New Zealand dollar CAD running. This is ADR today. That's where I'm looking to get out, which is just this kind of high from Friday and this propulsion gap. It's like 0.25%. So I don't know whether to bother banking it or not, but I might just leave it as it is for the minute. So yeah, pretty flat at the moment. Haven't got a lot on. Euro Swiss got out of one on Friday. That was the aggressive drawdown control position, did some aggressive drawdown control. So that's sitting in just under 0.5%. But yeah, pretty flat. Not a lot of opportunity at the minute. Well, everything worked about basically everything that we got into last week just all played out. So hence not a lot of drawdown. Morning, Lucas. This week will be good. Let's hope so. Morning, Kennelly. Morning, World King Top. I can't say your name. Let's have a quick look at the news this week then. We got 5 minutes to the open-ish. So today is nothing much happening today. We've got CPI flash estimates for the Eurozone coming in today, but we kind of found out what that was last week because we had the German CPI figures came out on Friday here. I would expect them to be the same, pretty much going to be an as expected result, I'd imagine, year on year. So no news today. So not a lot really, no catalyst to move the market specifically today. We've got the Aussie rates tomorrow. So the first big news is tomorrow morning with the Aussie rates. They're expected to go to 4.35. It's a Swiss bank holiday. We got PMIs as well tomorrow afternoon with jolts. And then we've got the New Zealand unemployment rate on that's Wednesday morning, really. It's 11:45 p.m. Wednesday is the preliminary non-farm employment. Then we got the CPI for the Swiss on Thursday. We've got the bank rates for the Bank of England on Thursday. That's going up to 5.25. Bailey has been very, 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 very quiet. We haven't heard anything from Bailey since we got the CPI figures. So I suspect that's going up to 5.25, but he's been very quiet. So hopefully we don't get any shocks there. But if we are going to get shocks, it's going to be a 5.5, not a 5.25. It's not going to stay at 5. Wow. Very, very, very unlikely. So we should get some bullish movement on Thursday from the pound. We've got Bailey speaking at 12:30. So that press conference is really where we're going to get the forward guidance. That's the important bit. Are we going to 5.75 or are we going to go higher? That's what we want to know. Unemployment claims on at 1:30 for the US, followed by the PMIs at 3. And then we've got unemployment for Canadian dollar and unemployment for the US on Friday. So it's non-farm payroll. So busy week this week, but today flat. Nothing exciting at all. Over the weekend, there wasn't an awful lot. A bit of mixed messages from the Fed. Lagarde came out basically and said, looks like Germany and Spain's figures are quite encouraging. We know that. They hit target. So nothing exciting there. So busy week this week. We've got 2 unemployment rates. Sorry, 2 unemployment rates. We've got a CPI. We've got interest rates. We've got PMI, which is very similar to CPI. So it's a big week this week for news. So be prepared. We've had a few ADRs already this morning. We've got 3 minutes to the news. There's no RSIs to look at, so it's going to be a fairly short session today because there's nothing moving. And it's nothing moving today, basically, because there's no news. So the only thing we've got extended at the moment on RSI is the Aussie New Zealand, hence my P&L being pretty flat at the moment. The RSIs are very, very quiet. Almost like we're in summer trading already, which it may be. If by the end of this week we haven't had a massive amount of RSI extensions, then I might look at reducing my RSIs down to try and get some more signals in. But Aussie New Zealand 4-hour RSI extension to the downside, and that's only just extended 28.97, so it's only just below the 30 level. So nothing exciting really at all there. But that's it. No other RSIs. Nothing to look at. Morning, Stevie. Right. We'll have a look at the ADRs in a minute. Let's quickly look at the DAX before the market opens. So DAX, basically, we had another update on Friday. We're up at all-time highs. Well, not all-time highs, but we're up at pretty much it is all-time highs, isn't it? Yeah, it is all-time highs. Excuse me, all-time highs since September 2021, because that's where my data goes to. But anyway, yeah. So we're up at the high highs. I was expecting a little bit more of a pullback on this move than we got, but what we got was a 2-week accumulation and then a break. So probably we're going to find this is all orphaned down here. So the only target to the downside would be the high of that range, which you would expect to act as support if we do come back down and retest. So that propulsion gap, which is 150 ADR, would be the ultimate low today, I think, if we get down there. But obviously the market's fairly bullish at the minute. We've opened pretty much where we closed, so there's no reason to go for gaps. There is no gaps, basically. All the gaps have been filled that we've done over the last week. So, yeah, go with momentum. Obviously, your upside target is Friday's high, which is also last week's high, because we made an all-time high on Friday. So that's where I'd look for resistance. Support could really come in anywhere down there. So we got that little low there from Thursday. We've got that low there from Friday. And then obviously below that, we've got the weekly support. So we'll see where we go. But market wants to go long so far this morning by the looks of things. Well, so there's your pre-market 15. Where we go. I've got earnings, have I? Look at that in a sec. So it's the last day of the month today as well. Morning, Day Trader FX and Martin. So yeah, last day of the month today. It's not a quarter. It's only the last day of the month, but we quite often find the last day of the month can be quite volatile. But the movement we get on the last day of the month is basically just book balancing to try and get their profit over the line. So traders get paid on monthly targets. So do banks and institutions from their investors. They get monthly commissions. So what tends to happen is if you've got stuff you can get over the line end of month for reporting purposes, they will. So sometimes we find we get big movements end of month on the end of the month. You get like 150 ADR days. Sometimes it's all done. They're where they want to be and nothing happens. So you can't really tell until the day gets underway. We've had a few ADRs obviously this morning already. So, but yeah, have to wait and see basically what happens today. But short on the DAX. Not very convincing break though. So we'll see. I was doing some testing over the weekend on these pre-markets. Somebody posted in Telegram, actually. They'd done some back testing on different date periods on the pre-market ranges. And they hadn't had particularly good results with it. I can't remember what the post was exactly. But I've done some further testing with the new version of the of this EA that I'm building at the moment on the pre-market and testing all the different pre-market ranges based on size and all sorts of stuff, gathering loads and loads of data. And the 5-minute ORB, which is the original strategy, which the video and the whole thing was born from, this pre-market range doesn't actually outperform this by any significant amount. So it's a much nicer little range to take. When the market goes mental and it flies, it's a lovely little one to take. But if you get a whippy open, this 5-minute range is actually a much more reliable range to take. And that is the original one. That's the whole purpose of this strategy originally, was the opening cash balance break. What's called the opening range breakout strategy. So this pre-market is something that we kind of came up with afterwards. And I've done some more testing on it over the weekend. Because obviously this new version of the EA I'm building is designed to just basically gather data and test lots of different variations and different permutations of the strategy. And it's actually about the same from a profit perspective, but from a strike rate perspective, it gets stopped out a lot more. So the 5-minute ORB, that one is a much better one to take, I think. And that was the original one. It's just better, the pre-market, when you get a run. When you get a fast, aggressive day, this one's more profitable and faster. Whereas this is a much slower burner breakout, the 5-minute. So I'm toying with the idea of switching. I mean, I am using both, but switching just to the 5-minute and just letting them play out longer, really. But as Outro's just said, double-ended whipsaw today. Yeah, so you do get that with the pre-market. That's the danger, and that's why the strike rate is lower. But when you don't get the whipsaw, you get much higher returns, faster as well. So it's double-edged sword, isn't it, really? But the 5-minute ORB is going in here. We got 28 seconds to go. So absolutely no movement today. Total doji going in at the minute. Dead as a doornail. Look. Total indecision. No directional bias at all. But it wasn't able to go short. So there's your 5-minute range. ORB2. So let's see if we can get a long break. If we can get a long break, we've got an obvious target today, which is nice. Obviously, it can go a lot further out the highs, but that is an obvious resistance. And I've been doing some more testing on, I'll go through all of this when I've finished all the testing, but on range sizes. So it's in here actually. Yeah. So the testing that I've been doing is based on 5-minute range size, and to determine what to do after a 5-minute range is too big to trade. So as you can see with this here, if the lines are painted in red, it means that that range is above 20% of the average daily range. Yeah. So 433, 20%. 4, 8, 16, something like that. 0.18% or something like that. But anyway, the number's not that relevant, but it's basically, is it a big range? If it's a big range at the open, what we tend to get, as you'll see, is a day like that where it doesn't really go anywhere. Yeah, so we closed there. Well, sorry, that's New York, but there's the open. There's the open of New York. Yeah, so the DAX doesn't go anywhere if it puts a big range in. But you watch what happens when you get a small range. It will paint in green. There's another big range. Yeah, see? So the big range at the open didn't go anywhere. What you do is you get a rotation day. So when we have a large volume put in at the open cash balance, there's a much higher probability, around 65%, that you're going to get a rotation day that day. So it's extreme mean reversions, which are much more successful trades on that day. There's another big one. Yeah. Big range. drawn in red. Maximum range is 383. We put in 615. So huge range. So 6, 12, 18. So that's around 1/3 of an ADR putting in one 5-minute candle. Market didn't have any liquidity left to go anywhere. Another big range. Opened up there. New York didn't go anywhere. Right? I think there's probably a small range coming up in a minute. But you see how many times you get these big ranges. Big range again. That one did actually make a little bit of progress. Small range, okay? Look at that. Small opening range, no initial cash balance, means there's a lot more volume and liquidity left to actually drive the market for the session. You get these big moves. These are the days your pre-markets will make you an absolute fortune, but so will the 5-minute opening range breaks as well. So what does it make more sense to take? 5-minute opening range breaks. Because on the days where you're not going anywhere, the pre-markets quite often won't get enough to make you a profit long term. You'll make a quick scalp out of them, but that's all you'll get. But obviously you can't tell when you're going to get a big opening range. This is the problem. So I've been doing, this is why I built this EA, so I can visually backtest stuff like this. And as you can see, these big ranges they're not conducive to making money. There are ways to make money out of them, but it's got to be a mean reversion based system or strategy rather than the opposite. See, that one with the green didn't actually get anywhere that day, but okay, look at that one. Another one, another big one. Tiny range, big move on the day. Yeah, we put in 4R basically on the opening range. Yeah. There is a clearer edge available if you do that sort of backtesting. So I've been working on that. Looking good. Anyway, I'll go through that when I've finished the backtesting, which I've got a lot to do. Okay, so DAX, we've gone short. 5-minute opening range break is short today. So far. But we are popping straight into this support resistance zone. Look. So if they buy that up, we may well flip short, flip long today. See. US indices aren't doing much either today. The Dow's kind of trying to go long a little bit. The NASDAQ's the only thing that's coming down today. So nothing exciting going on there. Okay, so let's look at earnings for today, and then we're going to have a look at the FX market, seeing as not a lot's happening on the DAX. So Arista, we've got pre-market today. That is it, basically. So there's nothing after market today to affect tomorrow. Tomorrow morning pre-market, we've got a few, but it's after market that it really kicks off tomorrow. So Wednesday is the first day that we're going to get some real potential volume coming through, which happens to be the preliminary non-farm payroll results as well. So we've got Pinterest, Starbucks, Uber, Virgin Galactic. I'm not quite sure how much Virgin Galactic is going to do, but and then we've got obviously PayPal, Shopify. We've got Amazon next week. We've got Apple. On Friday we've got Thursday we've got Apple and Amazon. So there's lots of big names coming through this week. So this week at the moment, I think Wednesday's probably when we're going to start to kick off with the indices with some decent volume coming through. But we have got pre-markets tomorrow, so we might get a bit of movement tomorrow. So maybe a little bit of a quiet open this week, because obviously there's no FX news, there's no real stock earnings news, nothing much to move the market is there. So we'll wait and see. And a short break is working, but I wouldn't exactly call it exciting today, would you? I was contemplating trying to take a Dow trade, but I don't think there's enough volume today to warrant trying to get into it. Might take a break of that, actually. So what I'm going to do on the Dow this morning, because on the futures I can't trade the DAX, I'm just going to take this range here, this 5-minute candle, which is the last 10 minutes. So there's basically it's that candle, that candle's range. I'm going to take a break of that. long or short, and just see if I can get, $500 or something out of it this morning. Be nice if it broke to the upside, actually, because we've got a very nice resistive area up there, but we'll see. It's not going anywhere. Right, ADRs. So the only ADRs we've got today are mainly Aussie and New Zealand based, as you'd expect, because we just got back the Asian session. If you've got any other pairs you want to look at, let me know, because there's not a lot else to look at really today. Aussie dollar Swiss, so ADR hit to the upside. Aussie dollar CAD, as I say, I've just got out of the Aussie dollar CAD. All the Aussie dollars have had a little bit of a push. New Zealand's been just as strong as the Aussie, which is why that's gone into a range. But everything else you can see, obviously, is doing okay on the Aussie side of things. So Aussie Swiss ADR hit to the upside. 5-minute mean reversal alert has just kicked in. Straight off of ADR, straight off of the previous day's high, end pattern reversal. Nice, simple, short. Aussie dollar yen. So obviously these yens are very weak. We'll have a look at all these yens in a minute. But we've just hit ADR on that one. No reversal alert as yet. If we go and push up to a new high, your support rectangle is going to jump up to there, which gives you a nice tight entry at around about 125 ADR. So there is potential, obviously, for a mean reversion play on that one. You've got a propulsion gap just gone in this morning here as well out of this lovely accumulation from Friday into Asia. So retest of that. So just take short into there as a quick scalp, but wait for the reversal alert, wait for some signs of weakness, some signs of the sellers being on board. New Zealand dollar CAD. So at the moment, I'm long on this in profit. I was toying with the idea of taking half of this off this morning because we have hit ADR. So I was going to take this one off. But then I looked at it and thought, well, I might as well just leave it on. And hopefully we're going to pull back and put in a new leg. The worrying thing at the moment is this Canadian dollar and this US dollar. I'm really unsure as to whether that's bullish or bearish at the moment. So TP on this, I'm looking basically just for the high of Thursday. See if we can come up to there and start to form a range on it. If we are going into summer months, summer trading period, you're going to find a lot of ranges start to form across everything. So the only reason we're going to move is on news, and quite often news moves to the highs of the range and then it drops off again. So there's not a lot of volume comes through, unless there's some news obviously that makes a big fundamental shift. But at the minute, I'm kind of giving it the benefit of the doubt that it's just going to flop around for a bit. So going to try and take that up to the highs up there. But there is a mean reversion opportunity on that one as well as a short for a short play. So you've had the reversal alert. There's your hit at ADR. Look, straight up, hit ADR, came off. There's your reversal alert. So bring it back down. Obviously, with these, you're only looking for sort of a third of an ADR, half an ADR. So half an ADR in this case is 43, which brings you down to there. A third of an ADR is going to bring you down into that propulsion gap there, really. So potential short on that one. New Zealand dollar Swiss. Same thing, your reversal alert there. So this has done 125 ADR, so much stronger push on this one. Aussie Swiss and New Zealand Swiss are very, very similar. Probably best just take one, not both. But there's your reversal alert. And again, look for the push down. We've got a propulsion gap on this one as well, I believe. Yeah. So that's your accumulation. Obviously, it gapped down with the broker, but big push up. That was the propulsion move. So look for that to be retested. Again, might just be reverting into a very tight range. But good opportunity for short. You've kind of missed that one, though. You should have really been on that one half an hour ago. It's already done 10 pips. New Zealand dollar yen. Again, this one, we've got an ADR hit to the upside. Nice resistance on the weekly we're at right now. And that is a really nice resistance. This area, we've been up here and did not want to bash through that area. So they've just done a V-shaped recovery on the news from last week, straight back up into that zone. So that might be a good rejection point. But the question is, what's going on with this yen? So there's a nice mean reversion opportunity. You've got nice resistance coming up. So if that first move doesn't work and it does decide to push further, you're going to get extended on the RSI on the hourly. Yeah, straight up into this area here. which is potentially going to add another level of resistance above you. So first entry, second entry, it's only half an ADR, or roughly 3/4 an ADR away. No, it's about half an ADR by the time you get the reversal alert. So quite tight entries, those. You have also got that high coming up as well, a little bit further up for another entry. And then if they've got all the way up there without doing any reversal, obviously it's going to come down much, much faster and harder. So one there, potentially one there. So there you go. So that's your ADRs. And as I say, RSIs, we're totally flat at the moment. So I'm just watching the Dow. The Dow's gone. I'm long on the Dow, which means, oh my God, the DAX is doing nothing. Look at that. So I'm long the Dow. Absolutely no volume this morning. I'm not going to risk much on this. I've just put stop under the low. There's no volume. There's no point in risking this today. It's either going to go or it's not. The DAX and the Dow quite often move in tandem. The fact that the Dow has broken high today and the DAX has broken low doesn't give me any confidence in this is actually a directional move. This is just orders being placed in the market. If it goes fine. But if it doesn't, I'm not going to push it today. There's no point in putting too much risk on the table today. If we can get a move up to the highs on the Dow, I'll be happy with that. Just take it off in that propulsion gap up there. Far away. It's just another 5-minute candle, basically. So $2,000. So basically, I'm just trying to quit. All that move is basically is that. So it's pretty much 2R. If I can get that today, that'll be enough. So the Dow obviously is broken to the upside. The DAX is broken to the downside. The DAX has run into potential support. So we may well do that kind of movement today, seeing as the Dow's gone long. So if that is the case, obviously we'll stop out on the short, flip long, and see if we can get a break and go for another all-time high. Right, that's it. That's all I've got for this morning. There you go. Nice quick session. There's nothing to look at. The market's flat RSIs. The market's flat ADRs. It's the end of the month. We're either going to get a massive influx of movement or it's going to be totally dead because they've already done it. So just a case of waiting to see what happens today, really. These yens obviously are very weak at the moment. So we had all the news on Friday last week for the yen, where we had potential noise that we were going to get some, where are we? Back here. There you go, Bank of Japan. So we were going to get some potential intervention coming, which would strengthen the yen and possibly an increase in interest rates. Not sure about that, but it was bullish basically. So we obviously had that big strong move from the yen, and we had that big strong move the prior day, and then we had this whipsaw. So the market basically was undecided when it actually got the news that we got given the heads up about on Thursday, and they've literally just reversed the entire thing. So this is what you hear me call a V-shaped recovery or an A-shaped recovery. So basically it's just a knee-jerk reaction, which actually no follow through. So what we were looking for on Friday was a pullback to take shorts. We didn't get a strong pullback, and yeah, basically hasn't done anything. So undecided again on the yen. Cannot pick a direction with this thing. It's every time it looks like it wants to go, it just doesn't get there. And it's very typical of the yen, but when it goes, you just don't want to be on the wrong side of it. So you've just got to be a little careful with anything you take on the yen, because if it goes into a multi-week squeeze, it's painful. So don't get into too much exposure on it. Keep your exposure light. And we'll see where we go with it. But I can't figure out whether it's a long or a short. And I get the feeling that we might just go into some kind of big wide range on it. In which case, obviously, if we can get some decent movement, we'll get some RSI extensions and we'll just stay range bound. There's no advantage in the US dollar dramatically at the moment. No advantage in anything, is there? So it's a tricky one, these yens, but I'll be looking basically just normal RSI extensions. So as soon as we get any extensions, watch those reversal alerts and get in opposite direction, basically. I don't think we're going to get into a squeeze on it, but equally, it's got to have some strength in it before I'm interested in getting in anyway. So pound US dollar, Peter, we'll have a look at that. I'll have a look at oil as well. So pound US, I'm long at the minute. 2 positions on, close to break even. So first entry was back here on the RSI extension. Very big, nice extension there. It looked like it was going to be a lovely little pullback and push. What we actually got was a little bit of US dollar strength, and Bailey didn't mention anything after the CPI figures, so he didn't help whatsoever. So yeah, not gone anywhere, have we? for a week and a bit now. So yeah, just sitting there at the moment, waiting for some kind of push into this propulsion gap. Target at the moment's up there. I think that's only one target. Yeah. So reducing target on it because I've got 2 positions on now. So second entry there. Just going to target those highs basically. So this propulsion gap where we got the resistance previous. Yeah. So just targeting that high. Push up into that propulsion gap again. So this was the move down. So we had a big 3-day accumulation, started a move to the downside, accumulated, started that move to the downside second time, came back, retested, added to the positions, drove it short. So market structure went high, low. Tricky one, that, isn't it? So it's more, depends where you wanted it to start from the move, but high, low, lower high, lower low. So we need a lower high. So somewhere back in that propulsion gap for kind of a double top to drive it back down again. That is assuming we get decent figures for non-farm payroll and, well, rather for the unemployment rate this week. The pound is going to be the sticking point this week for the pound US dollar because obviously we've got the rates coming this week. So the first movement we're going to see on the pound this week is going to be on Thursday. Well, it's not going to be the first movement. We'll see movement before that because we've got PMIs and things for the US. But the pound, obviously, we're going to get the interest rates on Thursday. The interesting thing to see on this will be the votes, basically, as to how many members actually voted to hike and how many members voted to pause. It's probably going to be the same, but if that comes out as more pauses, I mean, there's no one's going to say they want it reduced, but if there's going to be more pauses, that's indicative of we're not going to go for that 6.25, which is what we initially thought we were going to get. We're going to get the 5.75 terminal rate, which means there's only 0.5% to go. That's only 2 more interest rate rises in the pound. So the market may interpret that as a little bit more bearish, and we might get a little bit downward movement. But we're waiting for Bailey to speak. So it'd be nice to be out of this by Thursday. So if we can get some decent negative news on the US dollar before Thursday, I can get out of this and then just obviously sit flat and wait. But yeah, long at the moment. But the pound is a long. I've got no reason to say anything different about the pound. Pound should be bullish. US, neutral to bearish over the next sort of month or so, I think. So Dow's pushed up, by the way, in case you're in that Dow that I took. On the way to target. Actually, what I'm going to do, I'm just going to take one off here. I'm going to take one off here I've got 2 positions. I always take 2 positions. I'm going to take one off there, move to break even, and just see if I can get pop. If I can get pop on a runner up to Friday's high, highly unlikely it's going to do that before the New York session, but if, that'd be a very nice profit. But DAX is going nowhere. Absolutely going nowhere. Right, so that's pound US dollar. Oil, looking for a pullback on oil. I can't get one. Can't get in. Literally can't get into this thing. Just not giving any pullbacks. So I'm not interested in getting into something as it's grinding higher like this. It's just no risk reward that you can find that you can get into properly with a decent reward on it, basically. So I'm waiting for a pullback. We haven't got one. That was a bit too shallow. I was waiting for something a bit bigger than that because that wasn't even a 38 retracement. 38 retracement was down there. So I didn't manage to get in on that. I was waiting for a break and then a pullback from the break. We haven't had one. It's just grinding up ever so slowly. So it's going to do that, and it wants to go all the way to 83.50 a barrel, which is that high, without stopping. Fine, off you go. I'm not getting in. I'm not going to get in for the sake of getting in. The trouble with trying to take a trade when the market is moving up is it's impossible for you to put a stop anywhere. Because if you take a break of that high, do you put the stop under there? Do you put it under there? Do you put it under there? Under there? Do you wait for last week's low and sort of put it under there? There's a million places to put a stop loss that the market could come back and test or run liquidity on, and you've only got one target, and that one target at the moment is there. So if you use that low there, that's 42 pips away. Target's only 30. That's a negative risk reward. So you've got to use one of these levels. Which one do you use? It's just impossible to pick a decent trade to take on it at the moment. So if we do get a pullback on it, I would class this now as one move. So I'd be looking for a pullback on that move of at least 38 retracement. Then I would start to get interested. So when you look at it on the hourly chart as to where you're potentially going to pull back into, that high or somewhere in that range here would be a decent area to buy if we're going to step back and then take a new leg up. So, but at the moment it's not going anywhere. Just about hit TP on that and DOW. In fact, I'm just going to get out of that DOW. I'm getting out of it manually just to bank it. Actually, I'm going to close the whole thing. I can't be bothered with it this morning, to be honest. $1,700. I'm just going to take that. It probably will go a bit further, but there's not enough volume this morning in the DAX, basically. So I don't know. I don't really want to sit with a grindy trade on. I hate grindy trades. I like things just to go. Be done. Go there or don't. Let me know. Just don't grind there. It's annoying. So it's taking that off. $1,700 for breakfast. I'll take that. How was your EC trade last week? It looked like a banger. My EC trade? What's that? Euro CAD? What, that one? Well, none of my trades are bangers. I don't have bangers. I don't go for bangers. I just go for consistent profit. So yeah, I don't know. Made money out of EC last week. Nothing since though. It's really flat. You can probably tell in my voice today. It's one. I hate not having risk on because it's impossible to make money if you haven't got risk on. It's so annoying. It's almost like you want to take summer off because it gets to the point where you just, when you get into a position, you sit in it. Like this, the Euro CAD, prime example. Got into it there on the 20th of July. managed to get out with that tiny little profit there on like the 27th of July. So it took 7 days to actually do anything. And when you get into summer trading, you get these long protracted ranges form. You can be in them for 2 weeks and you'll have like that kind of price action for a week and a half. And you'll get into something and you'll sit there for a week and a half and it will flip flop between like -1 plus 0.01, negative 0.05. And it's just like you just sit there and watching this thing up, down, and it's just like, ugh. This is where scalping becomes bread and butter, making money out of the prop firms, because this thing just won't go anywhere. But then again, we've had summers where I've sat. Somebody asked actually in Telegram about it over the weekend. I can't remember what they said. It was to do with summer trading. Yeah, August is different for trading than other months for this. Oh yeah, I made the question. What was the question? I can't remember what the question was. Yeah, how about August for trading when the market reverse alerts you, basically? And it was, my answer is you don't know what it's going to do in a nutshell. Normally, volatility is low, but volume is low. We know that, which means quite often you find volatility can be low. But if there's large orders placed in the market with low volume, you get high volatility because the market has to move further to find orders to fill. So you actually get bigger movement. But what you end up doing is you're getting big spikes. RSI won't actually get to a peak and then it will undo it. And then you get a big spike as they fill an order and it comes back. So what you find is your ranges are still nice, but the actual speed it gets from the high to the low is very quick. Or you get these really contracted like days where your ADRs drop by like 20-30%. So the only thing you can do in these sorts of months is change the RSI setting and go for something that's going to give you more signals. So like on the hourly, drop it from a 21 down to a 14. So you're looking at the volatility over a shorter period, which will give you easier entries. But the problem with this is if this is actually a move that starts, you get in too early and then you find yourself getting too squeezed. So if you do manage to get something that does want to fundamentally shift and go in a direction, you're in way earlier than you should be. So I'm always loath to change my RSI because in the past when I've done it, it worked well at the beginning of this year. I changed it, if you remember, if you were here. The beginning of this year, I changed it and it worked very well. The problem with changing it is if you change that RSI right now and go, I'm assuming we're going to have a quiet summer month, and you drop it to 14, if we go into a massively volatile month, you're going to get hurt badly. It's going to be drawdown city for you for the entire August. But if it's like we are expecting, you'll be absolutely fine and you'll make a lot more money than I will. The problem is if you change it now, when do you change it back? The only time you ever change that back is when you identify that the volatility's come. By that time, it's too late because you've been getting in on much more sensitive instrument reading and you'll be in more trades. And then you'll suddenly go, oh, this drawdown's getting a bit, I better switch it back. Too late, mate. So it's a dangerous thing to do. I'm always of the opinion, if possible, just accept that you're not going to make as much money in August. Squeeze it out the indices. Dow's just taking out the high. There you go. So that was my TP. So it would have hit it. That was $2,000 or 1,700. I took 1,700. I'm always out too soon. But yeah, just watch this level. That's a propulsion gap fill. T2. So if you want to jump in on another one. But the DAX obviously is what you should be trading because this is where the volume is. Look at the volume. So yeah, not really going anywhere. Blimey. That's a big candle. We've got 3 minutes left on that candle. God, that's a big sell-off. Look at that. So there's your pre-market highs. So they don't want to go long today, do they? But that doesn't necessarily mean they want to go short either. Be one of those today. So yeah, so just be careful about changing your RSI over to make it a little bit more sensitive. You will get more entries, obviously, and there's a good chance it'll probably work okay. But if it doesn't, don't come crying to me. But yeah, so I'm leaving mine as it is for the minute, and I'll see how this week goes. If this week, because it's non-farm payroll week, we quite often do have a fairly quiet build-up in this week. The advantage we've got this week, obviously, is we've got 2 interest rates coming this week, one tomorrow and then one on Thursday. So we have actually got some other decent news that's going to move the market. So we should hopefully have a little bit of a money shift going on. So I'm hoping we do actually get some decent volatility this week. But we'll see what happens. The other thing I was going to say this morning, which has gone completely out of my brain. No. Some news I saw over the weekend. No, can't remember what it was. Doesn't matter. Obviously not that important. Otherwise, I would have made a note of it. Jerry, ORB Asian session range, pound CAD last week, 5 wins, 14.5 R, 1 loss. Yeah, Jerry, go and back test it. Brian's been running the Asian range, an Asian range breakout strategy with the ORB EA on the pound US dollar for weeks. I've back tested it with multiple system parameter permutations. None of them are profitable. Doesn't work. Well, I haven't made it work, but if you can show me a back test of like 6 to 12 months profitable results, then yeah. But last week means nothing, does it? Everyone can have a lucky week. I've had many lucky weeks. I made 25 grand the week before last on the ORBs. But last week wasn't great. I think last week I don't know, what did I make last week? ORBs last week weren't particularly good. What was last week? 30. 21st, roughly, something like that. What was last week? 29th. 24th. $2.5 grand loss last week. So, it swings and roundabouts. One good week does not mean you found the Holy Grail. 1 week means you've tested something in 1 week that actually had positive result. Got to be longer than that. And you need to test it out of sample as well. Test it in a previous period that's got completely different volatility, completely different movement. Test it over COVID as well, which is a fantastic test we've got now. We've never had before. Testing over a pandemic. You want to test it over a financial crisis. You want to test it over a pandemic. You want to test it over a low ATR year. You want to test it over a high ATR year. Get 4 different tests under your belt over 4 different periods of time. Does it still work? If not, dump it. Unless obviously you're using it just to trade manually, then obviously no back testing is going to give you any clue anyway, is it? Because it's all discretionary. Ending on the 8th of, that doesn't matter, Peter, because it's today and we haven't banked anything today. So I wanted last week's result. So if I change it to the 8th to the 2nd of August, which is in the future, doesn't matter, is it? Because I haven't banked anything this week. So what I just showed you was last week's result. Forward date doesn't matter, does it? If I'd have banked something today, obviously it would have skewed the results, but I haven't. We're not in here anyway. I'm very, 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 very glad I got out of that. DOW, very nice. I'll take that. Excuse me. But prime example of range bound. Yeah, if we are going to do that today, that's your high of the Globex session probably just gone in, and the DAX. If we do get down here, I think that's probably it today. I'll take that. Again, just going back to what we were discussing in the Telegram group over the weekend about the opening range breakout strategy and the guy that's done the testing on it and not got good results. As I explained in the Telegram group, an EA's backtest is not any use whatsoever for finding the right settings for a strategy. Utterly useless, because every single backtest you run is never ever going to be reproduced in the future. You will never get the same results in the past happening again in the future, because price action on no two given days in the last 25 years has ever been identical. Yeah. You do not get the same price action. Therefore, any result in the past is only indicative of what happens in certain circumstances, which is what you use backtesting for. You use it to find a strategy that has an edge. Then you do system parameter permutation tests to see how much variance you can get in those results and still return a profit. And if you can do that, hooray, you've got a winning one. If I publish a set file, that set file is one result from one period of time out of a test batch of 50,000. Yeah. So that set file, I've no idea what it's going to do outside of that condition that I gave, that I did the testing on. Yeah. That's not the purpose of it. The purpose of it is to do system parameter permutation tests and prove long-term profitability in a strategy. Yeah. So that's all I've done with the DAX. It's a long-term edge. But as I said in the message in Telegram, yeah, the EA will trade mechanically. So the EA right now is short on this. And if it gets down to here, it will take a TP and it will move. It will do whatever it does with the trading stop that you've got set. I don't know what you've got set in your version, but in mine, it will just do a trading stop. And then if it comes back there and stops out, it will get that one as a profit. As a human being, if this thing gets down to here and I see a bull candle go in at that low out of this propulsion gap, I shall close out both of those positions and take whatever the hell I've got. This is the difference between back testing and the real world. Yeah, the real world, I need to pay my mortgage. If the real world moves down to there and he's got £1,000 on the table, I'm taking £1,000. Not stupid. EAs are stupid. They're dumb instruments. They do exactly what they're programmed to do. What they're programmed to do is just execute a strategy. You're a trader. Everybody's looking, and this is the whole purpose of what I put in the Telegram group. Everybody's looking for one set file you put on a chart and you never touch it and it just makes you loads of money. It doesn't exist. If it does exist, I've been looking in the wrong place for 15 years because I haven't found it. And I've also built thousands of EAs and I haven't found it. It doesn't exist because you've got to be able to read the chart. There's no shortcuts in this industry. You've got to be able to learn to trade. Yeah, if this thing moves, if you've identified like I have, it's a low volatility day. It's a low volume day. You can see that. How can I see that? Sitting here for half an hour, I haven't gone anywhere. There's no volume in the market. If I can eke out $500 this morning, tick. Good trade. Yeah, I'm not going to sit there with the air and go, oh, no, it's starting to pull back. Hasn't hit target. Let it play out. No, of course I'm not. I'm going to shut it. I need money. I like money. I don't like getting back to here and then it pushing up to there and getting a stop loss of 2R just because it missed my TP by 6 pips or whatever it may be. Yeah. The back tests, you've got to do them because you've got to be able to test a strategy. But at the end of the day, that lot means absolutely bugger all because tomorrow has never happened. And whatever you've done, whatever set file you're using, it's nothing to do with today's price action. What's the best break to take today? Was it the 10? Was it the 5? Don't know. Certainly wasn't the 5, was it? Because you got double-ended stop out. So you're dead. So the 10 probably was the right one to take today. I know that because I've done testing that shows me that if the range is too small, you shouldn't take it. Ta-da! It worked. But I've done that because I've tested it and I'm trading it. Not doing it because a set of rules told me that every single day is going to work all the time. It's not going to happen, is it? So try not to get too hung up on one set file. Yeah, trade the strategy, but trade the strategy. If you can't sit here and you can't watch this chart, you shouldn't be trading the DAX. Yeah, if you're at work, you're not at work because you're in here. But if you're at work and you're in here, I don't know what you're doing. You're obviously not working, are you? But anyway, doesn't matter. If you're watching me, you can watch this. If you can't trade the time frame, don't trade the time frame. Don't get an EA to trade the time frame for you, because the EA is a dumb instrument. It doesn't know how to read price action. And if you can't be bothered to learn how to read price action, then you shouldn't be becoming a trader. You should go and work at McDonald's or do something else. Yeah. It's the harsh reality. This is a job. You got to do it. You can't get everything in your world automated, but you use EAs to semi-automate the process. I didn't have to think about going in here, measuring this, doing that, placing these orders, hoping they trigger, Let the EA do this part of it for you. Automate that part of it. Now I'm trading. I'm watching this. What is trading? Watching charts go up and down, waiting for a price to get into your favor so you can close it. That's your job. Think about it. All you do is you sit and watch charts go up and down. Yeah. If I can take out the measuring this, measuring that, placing those lines, pressing the button, moving the stops part of it, that's what the EA is for. And for backtesting, to give you modeling qualities and all sorts of things like that. Yeah, don't, I get the feeling the person in Telegram over the weekend was trying to say, oh, this is a massive con because, didn't want to do that. Because it basically, all the results he said are absolute rubbish. They don't give you the right results. No, you're just an idiot because you didn't read the test results that I put up on the blog post. Anyway, we'll leave that there. We've had date wrong. Yes, cover that one. I did 3,900 last week on the ORB. Good one, Harold. If you made a podcast, I would listen to it. Daniel, I do. It's called YouTube. So basically what you do is you just don't watch the screen. You just listen to my voice. Morning, Franco. Morning, Sarah. Well said, Sarah. Good, yeah. Why did you work out the minimum range for the DAX to be set at for the 5-minute candle? What did I work out the minimum range? So 0.8. So in my testing, 0.8 is a minimum and 0.2, although I'm testing 0.18, I can't draw at the moment, as a max. Yeah. So if this candle is less than 0.8 ADR, you can't get a trade on with enough room to breathe. So if you've got a candle that's that big and it closes here, right, and you place a pending order there and there, this candle at the open will quite often spread wide and tick up, tick down and do that. There's a load of orders going to hit the market, right? So what are you doing now? Long and short, you're hedged. And if you've got a tight stop on it, you're double-ended stopped out. And the thing hasn't even moved yet. So you've got to use a range big enough that the market's got a little bit of leeway. So 0.8, 1 ADR, 0.1 of an ADR, basically 10% of an average daily range is the minimum. The maximum has got to be no more than 20% of the daily range. The reason for that is if I'm going to get long here and have a stop under there, I've got to have room for this thing to move. If this thing's put in 1/3 of an ADR in one candle, for example, for me to get a 1-to-1, it's got to move another 1/3 of an ADR. That price action at the open, as you can see, yeah, look at the size of that candle and look at the size of every preceding candle. No bigger than that. So if you put in something huge at the open, to actually get a 2R out of it, it's got to do an entire average daily ranges movement in one session for you to even get a 2R target. So that maximum range can't be too big. It's also, as I've just proven this morning, with the back testing, if you watch what happens at the open, yeah, and you see these big ranges are not effective to trade an opening range break off because the market has done its moves. Yeah, it's only got a certain amount of volume that it can actually place into the market. There's only a certain amount of stock orders that are going to go long and short. If it puts in more than 20% of its average daily range here, it's going to find it hard to get any follow through, isn't it? Whereas if it puts in a small range and there's not many orders gone in there, there's a lot more volume, there's a lot more ammunition left for the market to actually make a run. So what you tend to find is with the big ranges, if they're too big, you just can't get that movement. Yeah. So if you look at that one there as an example, so 2410 divided by 5, yeah, 482. So this is measuring at the moment 0.18, as I said. I'm testing 0.18. Yeah, which is that. But 0.2, 20% of the average daily range is 482. So if it moves 48 points in that first 5-minute candle, it's done a lot of movement. It's done 20% of its movement in 5 minutes. We've got a long way to go. So you need the market to have ammunition there to actually get a move underway. That's why those mins and maxes, I'm testing them. And that's why they're in the ORB EA, yeah? So we put those in the opening range breakout EA. Yeah, minimum opening range and maximum opening range in pips. Yeah, because I knew they were important. I just didn't know quite how, which is why I put them into the strategy, into the EA, so that they could be tested. The problem is there's a lot of numbers to test, isn't there? So, but again, I've tested this, right? Going back to what we were talking about with, there isn't a set file that works. I've tested this with variances of 0.1 to 0.3 as the maximum opening range. Yeah. Guess what? They're all profitable. So you pick one. I don't know which one you want to pick. You pick any one you like. I'm testing 0.18 for a very specific reason. I want to use a 0.2 stop. I want to use a 20% of the average daily range as a stop. So what I want to do is make sure that my initial opening range is slightly smaller than my stop. Yeah. So that I can have my stops outside of the range. That's purely the reason for testing 0.18. It's not a case of, 0.18 is the perfect one. I've tested 0.01 to 0.30 in every increment of it, and 0.18 is the one that gives the most profit. That is curve fitting. That is not what you do in back testing. Yeah. This is a logical reason. I want my stops outside of my range. Therefore, if I set my max range to 0.2 and I set my stop to 0.2, I'll have my stop at the same level. If we get a double top or a double bottom, it's just going to stop me out every time, isn't it? So by doing that calculation, I make sure that I'm getting outside of the range of my stop losses. So, but you can see it the way it works. Yeah, these ones here. This is a prime example. Look, the size of that range there is wrong day now, but 619. Yeah. So as a percentage. Yeah, 30% of the range, 30% of the average daily range was done in that one candle. And look what happened after. The market was just like shot, couldn't go anywhere. Yeah. So if you were to use this opening range and you had an entry, obviously on a break of the range, which is what the opening range breakout strategy is, and you put your stop the opposite end of the range, look at how far you've got to get a 1R. Got to go all the way down there, yeah, or all the way up there, just to return a 1R. So if you got stopped out on one and flipped the other way, that has got to do all of that just to get you to break even. That's why you've got to have a maximum range that you go, this is too big today. If we take a break of this, it's just going to struggle to get there. So let's not bother. Let's go and do something. Let's go and walk the dog. We'll come back this afternoon and we'll trade the New York session. We'll have a look at the DAX in the morning. But what I'm looking at is when this happens, we know that it's very hard to get a breakout. So what do you do when you don't go for a breakout? You mean revert. Yeah. So on these days, I'm going to be testing, let's mean revert these. So where should we mean revert it? I don't know, somewhere like half an R to 1R, somewhere in there. And somewhere in there, if we get to those areas, let's go the other way. Yeah, and we'll use, again, a 0.2R stop, because by the time we've got to this area, we've moved 0.3 of an ADR, 0.3 of an ADR. So we've moved 60% of the average daily range by the time we get a break down to this sort of level. So if we put a 0.2 on there, that gives us a total movement of, I can't type this morning, 80% basically of the average daily range, right? We know that 58% of the time the market stays within its average daily range. So if we enter a mean reversion trade at these levels, when we've had a wide opening range and a 20% of an ADR stop, there's a high probability, more than 50%, that we won't actually get to ADR that day because the market's shot. So we can mean revert from there and go for a 0.2 ADR target. It's only a 1-to-1, yeah? But on these days, 1-to-1 is very achievable, isn't it? Because we've already done a lot of movement. They will work. So the whole purpose of this new EA that I'm testing is, right, what do we do when that happens? Right, we don't do that. We do that. Yeah, and we will test all of these different scenarios. So what's the best thing to do if the DAX has a small opening range? We take it. What's the best thing to do if it's got a big opening range? We wait. If we get to a certain level that looks like a good mean reversion, we'll take it. If we don't do anything. We wait for the New York session, and we just don't trade the DAX because the market conditions are not right. And this is where everybody gets killed, trying to get a trade out of something that's just untradeable. You can't trade that. There's no opportunities to get in unless you take that. But if you're going to take that and actually make money out of that range, you've got to have a super tight stop. What happens with super tight stops? They get stopped out. No point. We need to use a stop that's decent enough so that we can actually get into the market, let it breathe, let it move, and hopefully go back in our direction. You've always got a 50-50 shot, haven't you? But you've only got a 50-50 shot if you let the market move. If you put a stop in that's really, really tight, you're not even going to get there. And it'll probably go down to where you wanted it to go down to, but it will take you out with it before it goes. So all this testing is showing what happens basically when certain conditions are met in the market. And, you know, this visual tool that I'm building is a lot more useful because you can see the big runs. You can see what happens on different days with different things. Look at that. It's beautiful. That's a 2R. So basically we took a break long. We got a 2R and another 2R. So there's a 4R. We took a stop out with a minus 2R there. So we made a plus 2R on that particular day because the range allowed the market to make a move. Yeah. On the bigger days, the range doesn't allow the market to make a move, so we don't bother. It's this, you know, just using your head. Look at that. 1R. So all it managed, 1R. It's not worth taking a trade with a 1-to-1 risk-reward ratio. It's not profitable, is it? Unless you get over 50% of the time, it hits them. But we know in range-bound and high opening range days like this, it can't get 1R because there's not enough left in the market. So there's no point in taking these trades. You've got to be able to figure out what the mins and the maxes have got to be. So, but yeah, it's interesting doing this research because you can clearly see how to make money. Look at that tiny little opening range. What did the market have? Ammunition. Where did it go? 10, 12R that day. Obviously, you're not going to hold on that long. Well, you might do. But again, this is where discretion comes into it. There's the 2R TP. There is the 5R TP. Both of them got hit. Now, if I had been watching this and seen that this range had formed and then see that big, strong breakdown, that one hit TP. But I might have decided, actually, well, let's just take the TP off and put a trailer on it today. What would a trailing stop have done? Got out there. Discretionary. You've got to be able to watch this and go, this looks like one of those days where we are going to cream it. Bang. But you're not going to be able to identify them if you're not watching the chart. So the EA would have just made that. A human being could have made twice as much. Just with a trailing stop, not doing anything clever, just putting a trailing stop on it of roughly 50 points, because that's what that candle was. It's not rocket science, is it? Anyway, testing in progress. DAX has gone long. So stopped out on the shorts. flip long. So we'll see if we can get that run out the highs today. The Dow is looking like it might be putting a market structure long as well, which is nice. Shroud, I have a question. Does MT4 backtest, is it reliable, or should we use other extensions like Tick Data Suite? Yeah, don't ever use your broker's data. Always use Tick Data Suite. I never use anything but Tick Data Suite. Yeah. Always use Tick Data Suite. You need reliable tick data. 99% accuracy. But again, you know, the only reason you're using 99% accuracy in your data is to get a period of time with every tick, so that you know whether this data that I get from Dukascopy is better than TrueFX, Alpari, FXCM, Darwin X, or anybody else. I don't know. I know it's better than my broker's data. That's what I do know. And I know that I now have data going back to 2011. Because that's what I've downloaded. And I can download more if I want to. I can go back way further than that. But that's what I've got. And I can adjust this data. So basically, when you're downloading tick data, you are downloading tick by tick by tick. There's no candlesticks. You're downloading ticks of data. One tick up, one tick down. Yeah. It's not time related. So you have to set the offsets. And it's very easy to do, because all you do is you get your broker's chart, the DAX here, and you look at the last 3 days, you run a tick data test with it set up as you think it should be, and then you compare those two charts side by side. Do the candlesticks look the same? Yep, brilliant. You've got your GMT offset and DST correct. Really simple to do. Once that is done, you know that this data is as accurate as you can possibly get, and it gives me 99% modeling quality. So having accurate data is the first thing you've got to be able to do when you're testing anything. Obviously, the back tests mean absolutely nothing, because that's just what's happened in the past. But it shows you that the strategy that you're thinking of using is profitable over a period of time. And then if you can take that test and do it over another period of time and it's profitable, you know that's profitable. But the thing that is the key to back testing isn't finding a set file that works. It's finding a system parameter permutation set that works. Yeah. Running optimizations. This is the key. Optimizations. When you run optimizations and you change these settings from, like this one here, going from 0.1 in 0.01 increments up to 0.2, right? So that's the percentage of ADR to use as a stop. So if I test this strategy and I run all of these tests, there's 10 tests. If every single one of those 10 tests is profitable, that tells me that there's an edge, because it doesn't matter if I'd have used that stop, that stop, that stop, that stop, or that stop that day, they all worked. Is that profitable strategy? Yes. RSI. Test the RSI 14, 15, 16, 17, 18, 19, 20, and 21. All of those 7 RSIs. If I'd have entered when the RSI was extended on all of those and gone for a 1.5 hour short with a stop above the recent high, would that have been profitable? If all 7 of them say yes, there is an edge. Not because it's the 16 that's right, or the 14 that's right, or the 21 that is the right RSI to use. It doesn't matter. If you'd have mean reverted a push, it works if you use 1.5 hour, right? Okay, well, let's try all of those with 1.5 hour, 2 hour, and 2.5 hour. So now I've got 3 times 7, 21 different tests. So if all 21 of those come back as positive, some of them making $500, some of them making $5,000, that is a robust system parameter permutation test. Yeah, it tells me that it doesn't matter what stop I'd used, what RSI I'd used. If I'd have just gotten short with the stop above the high, I've made money. That's what backtesting's for. It's not for finding the set file that gives you the most profit, which is why I put out 6 or 7 different set files for the ADR, for the ORB EA, because they're all profitable. Yeah. So are the other 45,000 or 50,000 tests I did. They're all profitable over that time period. So it proves a robust strategy. Whether or not they would work every single one of those 50,000 tests over different timeframes, I don't know. Some of them will, some of them won't. But if you pick the one that actually didn't work because it fell so far out of that bell curve in the testing, unfortunate. But if you'd have picked any one of the other 25,000 or 35,000 that were within the bell test, the bell curve, that would have worked. Yeah. So that's what backtesting is for. It's, and this is why everybody, when they sell EAs on all these EAs that you buy, they've got 3 settings in them: conservative, aggressive, and super aggressive. Yeah. All that's doing is it's changing 3 of the 500 tests they did to be the one that you use, because they know that the other 497 didn't work. So they'll set it up so simply that you can just do those 3. And they tell you, some of them even tell you what period of time to test it over, because they know that that's profitable. They know that if you tested it in 2012, it actually made a 300% loss. Tell them that. Yeah, this is what you find out in backtesting, but that's what you do in backtester. It's not for going, that strategy doesn't work. No, that system parameter you tested doesn't work. The other 9 out of the 10 do. You used the one that didn't. So overall, there's an edge, isn't there? 9 out of 10 times it would work. That 1 out of 10 was the one that you chose. So you don't throw it away because of that. You keep it because 9 out of 10 did. Big difference. This is what people don't get about the system, about the back testing. It's a key point, because that's what it's for. It's for running back tests on a strategy. Is there a way to make money doing this process? Right. Does it matter what I use? Yes. Okay, well then it's not very good, because it's just that works. This lot doesn't work. So we're not going to get that in the future, are we? We're going to get somewhere around there. Bell curves, I've mentioned this before, but that's what bell curves are for. Bell curve looks like this. Okay. It's really badly drawn. So when you're running a test in the strategy tester and you test 10,000 system permutations, i.e. 10,000 different combinations of settings, different RSI levels, different ADR stops, different whatever the parameters of your strategy are, the breaks, the 5-minute break, the 10-minute break, the 15-minute break, or the 5-minute, or the post-market 5-minute. Do I use a stop of 100%, 10%, 20%? Yeah. Do I use a TP of 1 to 1, 1.5 to 1, 2 to 1? They're all parameter permutations, system parameters, and there's different permutations of them. When you test an EA with 5 or 6 combinations and get 10,000 different test results, there will be a bell curve of results. You will find that the most profitable and the least profitable will sit outside of the norm, or the average, if you like. 60% of your results, if you can get 60% of them over the line, that is a robust strategy. These are outliers. These are highly unlikely to be produced in the future, because there is so few permutations that produce the same result. They're not worth taking into consideration. So if you can get something with 60% of the results, i.e. 6,000 permutations of your test came back as all profitable, that's robust. That strategy has got a 60% chance of working in the future. That's how you backtest. Yeah. You don't just pick a set file and go, it didn't work over that year. Maybe it didn't. But did 60% of the 10,000 tests work over that year? Yeah. Then it's got a bloody good chance of working in the future, isn't it? Very complicated backtesting. So I'm only talking about this morning because obviously it was a topic over the weekend in Telegram. So, and it's an important one that people need to understand, obviously, because the key to actually using strategies profitably, you've got to be able to make sure they work long term. There are some days when the opening range is massive, but still only 1/10 of the whole day's range. Well, that's not massive, is it? It's 1/10 of the whole day's range. That's small. 1/10 is not a large opening range. Morning, Michael. Morning, Baggy. Is the new ORB a new EA? This, no, this is not a new. This is not nothing to do with the ORB EA. No, this is a totally different thing I'm building. So I've called it Index Scalper just to stop the confusion. It's nothing to do with the opening range breakout EA. It does take opening range breakouts, but it's not the ORB EA. It uses it's similar, but it's not. if your question is this going to replace the old one? No, because everybody's using the old one, and if I replace it with this one, nobody's set files will work. Nobody that's making money out of it will be able to make money out of it in the future. That is what it is. I'm not going to muck about with it. There's no point. It'll be a different thing. I don't know if I'm going to release it. It's for me to test. But if it works very well, then obviously, yeah. But what I don't want as well is people are contacting me saying they're getting told off by prop firms for using the opening range breakout EA because they're all using the same set file. And obviously, they're all taking the same trades. And some prop firms, not the big ones don't give a monkeys. The small ones that some people are going to are stopping. They're not getting past evaluations. And somebody said they've had their payment stopped because they used they used an EA basically that someone else was using. So basically, these small prop firms who are desperate for cash because they can't compete with the big guys are making every possible opportunity not to pass you, not to pay you. When realistically, if you think about it, all this thing is doing is pressing the buy and the sell button after a candle's closed. You can't stop someone making money doing that. There's 1,000 people doing the same thing. They have been for 25 years. This opening range breakout strategy has been there forever. So the problem is if I release one EA that works fantastically well, no one can use it. So, and this is the problem with releasing set files, which is why I don't like doing it. And I've released a very limited amount for the market reversal alerts EA. There's over 1 million system parameter permutation tests you can do with the market reversal alerts EA. I've released 4 set files. Why? Because if everybody goes and uses the same thing, there's a footprint, isn't there? But they all work. This is the thing. So you've got to be a bit careful with EAs. If people are using them for their own use, it's no problem at all. But if you're trying to use them on prop, some of these prop firms, and it's only the small ones, the big guys, my Forex funds, EA, and that, they couldn't give a monkeys. They're making 20 million quid a month. They don't care. They make more money per second than you could ever extract from them. So it doesn't really matter to them, does it? But the small ones that are getting like 50 or 100 customers a month, if 3 people take the same trades with an EA that happens to make 15 grand, that's a massive payout for them. They can't afford it. They go bankrupt. This is why they're trying to make any inroads they can into not paying you or not passing your evaluations because of a rule that they said was okay, but it's not quite the one they want. So, but again, someone's mentioned this in Telegram and I've said, email them. Say, this is the EA I'm using. This is the strategy I'm using. Is this okay? Are you okay to pay me on this and pass my evaluation? And 100% clarify it before you put any money into them. And if they then come back, you've got it in writing, says, no, I've got it in writing. You said that was okay. You've got a case, haven't you? Otherwise, you haven't. You're getting a bit. Some of these little prop firms are struggling because they can't compete. So you be a bit careful who you choose. Again, this is why I got the thing on the website. Yeah, these guys don't give a monkeys. Any of these prop firms on the website, they are huge. They're making so much money they couldn't give a monkeys. If you made 25 grand in a month, they'd be like, yeah, whatever. 25 grand. We made that last minute. Can you do a session on backtesting? I've just done it, Harold. And how to set it up. Well, it's backtest. There's nothing to. The reason I haven't done a session on backtesting is because there's loads on YouTube already, and there's nothing to it. You open up your EA, you set it up, you pick the time you want it to run between. The times are down there. Can't see because my head's in the way. Yeah, you pick the times, and you press the button. Instrument, model, every tick. Times you want it to run. Make sure your spread's right. What time period you want. Start. What else do you need to know? Strategy. If you want to know about strategy testing, go and watch this guy. Go and watch StatOasis. Ali Casey. If you want to know how to backtest, he'll teach you how to backtest. He doesn't use MT4. It doesn't matter what platform you use. What is important is understanding what a backtest is telling you. A backtest is not telling you what is the very best set file to achieve a result with. The backtest is there to show you a robust system exists, not it's profitable. What everybody does in the backtester when they run an optimization test, for example, is they go into the results and they sort them and filter them by price. Let me show you quickly. I'm just going to open one. Don't know what this one is, but yeah. So there you go. This is a good example. So this test here, this is one of the ORB tests, basically. Right, there's 1,200 system parameter permutation tests performed with the EA, right? Out of those 1,200 system parameter permutation tests, 1,130 of them produced a profit, ranging from $14 to about $25,000, right? The point is, I ran 1,200 tests with completely different settings for ranges, take profits, and stop losses. So it's a case of I hit the button, I might get filled there, I might get filled there, and my stop loss might go there and it might go there. All right, so this is the test. Does it matter if I take that trade there, there, or there? And does it matter if I put my stop there, there, or there? Yeah. I ran 1,200 different tests with different variations, every single one of them unique. 1,130 of them returned a result higher than break even. Is that robust? Yes, that's the result. What everybody does is they go, right, go to here, sort by profit. So I can make 23 grand if I use a TP of 250% of the stop loss, and the range is no more than 0.1. Right? That's what everybody does. That's an outlier. Remember that bell curve I drew? Yeah, that sits here, the very edge of that bell curve. The $14 profit sits there at the very edge of that bell curve. That's 23,000. That's $14. We're not interested in that. The likelihood of exactly that result being produced again isn't going to happen. But you go down and you look at what 60% of those results achieved roughly. So is it better to use roughly this or roughly that? Yeah, that's what it does. Everybody's going for this. And that's what all the crappy EAs that you buy on the marketplace go, hey, look at our backtest results. And you go, yeah, that's brilliant. But then that is never going to happen again in the future. Can you show me what happened with all the different variations of it? No. Why not? Because it didn't work. That's exactly what you're buying on MQL5 when you're buying these EAs that have very little settings or any way of testing anything, because all they're doing is they're curve fitting one set to one instrument to one time frame over one period of time and going, hey, look at this. You're going, wow, never, ever, ever going to repeat it. But if you can repeat 11,000 variations of a test, which had 12 or 1,100 rather of 1,200 that were profitable over a period of time, it doesn't matter which one you use, does it? At some point, if it breaks that line with any stop somewhere around there, you're going to make money. That's the thing. That's what you've got to test. But that's not what people do. So you look at the return on drawdown. It ranges from 2.7 all the way to 0.01 and everything in between. So if you take 60% of these results and go from there roughly all the way down to somewhere down there of an equal distance and get rid of all that top bit, get rid of all that bottom bit, what should you achieve? Somewhere between 1.46 and 0.6. It's all still money. So you're going to get roughly 50% return or way over 100% return. That's basically what it's saying. but it doesn't matter which one I use. So just pick one. Just go like that one. That'll do. Doesn't matter, because I've got no way of knowing whether that is going to be better tomorrow than the one above it, the one below it, have I? Because it hasn't happened yet. But I do know that they all work. That's what the ORB strategy, the ORB EA was built on, that back testing to give it an edge. We know it's got an edge. It doesn't matter what you use. The days that you use it, the days that I use it, are going to make results different. Whether you're using a 0.1 variance and I'm using a 0.2 variance on one of the settings in it is going to make a difference between you making money and me not making money, or vice versa. Today, but tomorrow, we'll both make money, or tomorrow we'll both lose money, or tomorrow you'll make money and I won't. We don't know. At the end of the day, you just take a trade. But that back testing gives you the focus, if you like, or the reliability that doesn't really matter. I know it will work at some point, and I also know it won't work. Yeah, look at the back testing results. Again, somebody said, I've noticed that it didn't make money for 5 weeks. I've been using it for 5 weeks and it hasn't made any money. No, you know that though, don't you? Because I've given you all this back testing data on the blog post that tells you that that doesn't make money all the time. Oh, really? I think the problem is people don't understand what they're getting and what they're seeing, which is totally, I can understand why, because not everybody's gone into it as much detail. But all these back tests, look, from that point there to that point there, didn't make any money. Didn't lose, because it got back to here. Didn't really lose any money. It stagnated. Yeah. So why would you expect it for 5 weeks not to stagnate or make a loss? It's proven. It's 100% proven. I've published the results that it stagnates for months on end, because it's a strategy using breakouts, and 80% of the time the market is range bound. So 20% of the time it's going to work, 80% of the time it's going to stagnate. Look at them all. They've all got stagnation periods, some more than others, depending on the type of strategy, yeah? But they are all long-term edges, and these are a handful of those tens of thousands of results I've just shown in the spreadsheet, of multiple tabs of tens of thousands of different results with different versions of different instruments and all sorts of stuff that I've done. They all work. It's just you don't know which one. That's the whole edge of the strategy. There you go. Back testing. I think that's probably the video, isn't it? That's what you needed. This might be an obvious question, but how many years have you tested the MRA EA using the H1M5 set file? I've no idea. On what instrument, with what settings? I don't know. I've been live trading the strategy for 5 years, profitable every year. I haven't done any detailed testing on the market reverse alerts EA in any instrument for any period of time. I've tested every instrument with a set of results, and they all work, but they all blow the account as well. Because I cover this all the time. Look at Aussie New Zealand. What did I have to do on the Aussie New Zealand? Why my results disappeared? Where's my trades? If I changed my history. Where's all my trades gone? My trades have all vanished. Weird. Anyway, but with the market reversal alerts, yeah, with the position trading strategies, yeah, you've got to do drawdown control. Yeah. So whatever test result you get with the market reversal alerts EA, it will show you what would have happened if you hadn't have touched it. Yeah. And God, where's my testing on that? It's so long ago that I did it. I don't even know where the testing is. But I've got similar there you go, this is an example. So I've got similar spreadsheets to this, look, with different pairs tested. This is a different test, but it's not the original one, but different tests basically showing the system parameters and the permutations and the profits and results and everything. Yeah. So I've done loads of it. But as you will see, with a lot of the settings, there's a load of results missing because those will have blown the account. Why would they have blown the account? Because it got into a squeeze and there was no drawdown control done. Because if you set the EA to do drawdown control in a specific way, and it isn't the right way for that instrument based on the profit that you've made on the other instruments, you cannot get an accurate result. So there's no point in testing drawdown control, is there? Because you do drawdown control, the human being. The EA will do a certain amount of drawdown control for you. Yeah, like that one there. But if you need to do aggressive drawdown control, or like me this morning, yeah, decided to close that out, right? I decided to close that out because it was approaching ADR and it was getting towards where I was expecting it to bounce from. What's happened? It's bounced. Why is it bounced? Because that's what I was expecting to happen. And it's not bounced because I was expecting it, but that's what I was anticipating might happen at resistance. Why did I take it off? Because I had a profit. If the EA was told to target 1.5 ADR, your TP would be there and you would be now making less money on it. If this thing now collapses and goes down for 4 weeks on the trot and you don't do any drawdown control, it's going to blow the account, depending on the risk you've used. So what use is a backtest? Because a backtest is going to show you what the EA would have done with no human intervention. You're going to intervene because you're a trader. Yeah? This is, I go over it again and again. There isn't an EA that can make consistent profit in the market. It doesn't exist without human intervention because this day today has never happened in the past. So how could you expect to find something that's going to work on this day when it's never happened? The conditions today are going to be different. Today, I needed a TP there because I had enough money. I've had a good month, a good week, and everything's going well. So that's where I took my profit. If I was having a bad time and this was trade number 7 in a hideous squeeze, I wouldn't have taken a profit. The EA can't be taught that. The EA is taught when the RSI gets extended, drop down to M5, wait for the buyers to come in, and then take an entry. It needs an exit criteria. The exit criteria is going to be different depending on what your P&L is because you're a position trader. You're not an EA. I'm looking at this Aussie US thinking, probably want to close this out because I've seen this flip-flop around up here between 300 and 200 all morning. Might as well just stick it over there and make this a $500 day. The EA isn't going to make that decision for you. The EA is going to sit there and it's going to wait for that TP to get hit. And if that TP doesn't get hit by Wednesday, when we've got the preliminary non-farm payroll results coming out, it's not going to move it to break even because it's not a trader. Yeah. All EAs do is execute orders. Is it the right thing to do or the wrong thing to do? No, but that's all you're going to get in a backtest. And you're going to get different results. So when you've run your first set of backtests with the market reversal alerts on one instrument over a period of a year, you've then got to do all the system parameter permutations. There's millions of them. That's just one instrument over 1 year. There's millions of them. It's going to take you a year just to do one backtest. Which is why I keep saying, don't worry about it. Get in. Get in with a small amount of money that if this goes down there, you haven't got to worry about it. Euro Swiss, I've been in this thing for weeks now. Look where I got in. EA's taken every single one of these trades for me. It's done all this drawdown control for me. I did that aggressive drawdown control on Friday myself because I'm a trader and I have to monitor my trades. All the EA is doing is executing them. Running a back test is going to show you what would have happened in the past if you had not have been there. You are there. Yeah. It's not the Holy Grail. It's not something that you can just forget about. You know, you've got to be able to use your indicator. Very important. Release your new ORB EA Osborne effect. What's the Osborne effect, Virginia? I don't know what that is. What does payoff value mean? Payoff, how much money you would have made for each dollar. So if you risk $1 and your payoff is 1.2, you'd have made $1.2 for every dollar's risk. I work on profit factor. Profit factor, I think, is a better measure to use. But again, there's no right or wrong. If everything in backtesting, if you watch Ali Casey's videos, you know, I've not watched all Ali's videos, but you know, he's very much along the same lines as me. He's an algorithmic trader, and everything he does is data driven, 100% data driven. He has an edge. He finds edges. I find edges. That's it. That's all you do. You find an edge and you exploit it. How that edge plays out in the future is down to you to watch, monitor, and manage. Yeah. So you can create stuff to go, right, I'm asleep. The RSI is extended. We've had a 5-minute reversal alert. I need to be in the market, but I'm asleep. What do I do about that? I have automation. Right, I wake up in the morning. Okay, brilliant. I'm now long on this because the automation got me in. That's what I wanted to do because the edge I've backtested tells me that that's what I should be doing. Now, what happens from here in the future, I deal with myself because I'm a trader and my money is in the market risking itself in that direction. So now I'm going to deal with what the outcome is going to be. EA can't do this. It can get me into more trades, obviously, which it will do, which is what the market reversal alerts EA does. If you leave it on, like I've left, let's look at some unattended versions of the EA, yeah, market reversal alerts EA running that I haven't even opened this VPS up to look at these results for the last 2 weeks. So I have no idea what this is going to be. But this is 100% unattended, not touched. I don't know whether it's going to be good, bad, or ugly, but this is the market reversal alerts EA running with no human intervention. So this is loading. So this is ADR reversals. Oh, come on. Right. So this is H4M15, H4M5 mean reversion. So it's broken even this month. Yeah, haven't touched it. Running on every single Forex pair. Haven't touched it. What's it done this month? Nothing. Hasn't lost any money. Hasn't made any money. Yeah. Full automation. This is my account that you're looking at in the live. Oh no, sorry. This is H1 hedging. So H1 hedging has made 32% this month, sitting in 7% of drawdown. Haven't touched it. Literally. The edge that I have discovered, I've put on the chart, I've told the EA to do everything I think works, haven't looked at it. It's made 32% profit. Is it going to do that next month? I have no idea. But this is me not looking at anything. H1, this is my account that you're seeing in the live room. This is the ADR reversals. Break even sitting in 3%. Unattended. Yeah. You could have done way better than that if you'd have attended it. Same with H4 hedging. I mean, you probably couldn't have done much better than hedging, could you? Because hedging's made 32% profit without being touched. But do you see my point? If you leave it unattended, right? And this is a back test. So let's say this is a back test of this month. If you take that and you test the exact settings that are being used for this H1 hedging version of the market reverse alerts EA, and you do it over 12 months on all of these instruments, and you get a positive return, you know that you can do that and just leave it and not touch it. But if you get every single instrument out of the 28 that you've tested on, you test every single one of them, and 5 of them blow the account, what do you need to do? Right, I know that I need to intervene sometimes. How do you intervene? Aggressive drawdown control. Yeah. So just because you count 5 that blew the account and 23 that didn't blow the account, right? You don't throw that strategy away. You got 23 FX pairs that 100% unattended for an entire year produced a beautiful result. Deal with the problem. Yeah. How do you deal with the problem? Trading, monitoring your P&L. That's your job. And as I say in here all the time, my job is literally to do this. Look at this thing. That's all I do is I look at this thing every day. I watch it. And when stuff gets a little bit more than I want it to be, I figure it out and sort it out. I either start closing stuff out and going, oh, I don't like it, and I use all this profit that I've made on full autopilot, or I go with an aggressive drawdown control position and then reduce some of my risk down so that there's less pain. Yeah, that's what's taught in the bootcamp. The EA executes it all beautifully when it's beautiful. When it's not beautiful, you've got to intervene. Same with the ORB EA. Look at the DAX this morning. Yeah. So far this morning, sitting on a loss of $976, right? If this thing gets up to that TP there, that is $1,400, right? What the EA will do right now, when it gets there, is it will close that position out and it will move that one up to break even, right? What I will do, if this thing gets to $976 profit today, which is somewhere probably around there, I will close both those trades out and go, that was a crappy session, and walk away because I'm a human being. Yeah. I want to get that back because today is not a good day to be trading the DAX. So if I can come back with a break even, fantastic. Or I might make a decision to go, screw that, let's close that out and take a $700 loss. That's decisions you've got to make as a trader. You can't just let the EA do the full automation for you. And I've covered this many times in here, haven't I? Every week, it seems, I seem to say the same thing. But it's because everybody needs to hear it. Everybody needs to know it. It's important. Okay, finally get what you mean when you say the EA is just a blunt tool that opens trades for you. Exactly. Yeah. My strategy, my core strategy is multi-time frame mean reversion. Yeah. Position trading, which is, in a nutshell, I wait for market extensions, which I measure with the relative strength index. I then enter waiting for the bank profit take move, which is the mean reversion, when there is a reversal alert using the indicator I developed to show me when the market structure is shifting and the buyers are entering back into the market. That's my strategy. I don't use a stop loss because I know that if I do, I will get stopped out, right? So to be able for me to execute that, right, what I have to do as a human being is either have a dashboard, which I built, this is what I built before I started manual auto trading, that goes ping every time that the condition is right. And then I need another dashboard to monitor the things where the condition is right, to go down to the low time frame and then wait for the alert to come in. And then I wait for the ding on that. And when the ding on that comes, I press the buy button. Now I've got to monitor it, that if it goes against me, I wait for the conditions to be right, i.e. the distance is correct, and I get another ping from that dashboard to enter the button again. All I've done is I've automated me with the menial tasks, the same way as every other business does. You go into the business and you go, what takes us the most time, costs us the most money and staff? Right, automate all that. That's what I've done. I need to sleep for 8 hours a day. When I'm asleep, I still need to be managing these positions that are open. So the EA, as a blunt instrument, just executes those orders. If everything goes according to plan, which it does 85, 90% of the time, literally all that happens is I wake up in the morning and I go, stick that there, stick that there, stick that there. Right. That's it. Now I'm done. Now I can go off and do other things. And I come back every 4 hours and look at this thing and go, anything more? Yeah, I'll just stick that there if I want to. I can stick that down there if I want to and add it back on again. Those are the decisions I have to make as a trader. I don't have to be trading manually using dashboards. I do all of this in here to show everybody how it's done. And these tools you can use if you want to do it manually. But if you want to do it automated, you don't need any of this. You just need one EA, which costs $99. You stick it on every single chart with a little risk and walk away and come back every 4 hours and watch your P&L. But you've got to have a blunt instrument to do the blunt work. Otherwise, this job becomes a 12, 14-hour day staring at a candlestick. Literally what we do. It's not exciting. Everybody that's driving around in the Ferrari selling you £2,000 courses is going, trading's exciting, you make fortunes. You see what I do every day in here. I come in and I say the same thing over and over again. There's no RSI extensions to look at. The ADR extensions are here, so you could take a short there if you wanted to. There's news today. It's this, that, and the other, so we expect the market to move. I've been doing this for 5 years on YouTube. It's boring as hell. So I've got automated tools that do the 90% of the other boring stuff I have to do to make money. And that's it. It's very, very, very simple. But everybody's looking for this back test, which creates a fortune that they don't have to touch anything. It just doesn't exist. I haven't found it in 15 years. And if it does exist, somebody prove me wrong and give me the EA that does it, because I can't find it. I'd love to find it. And mine will do it, yeah? I can run a back test on the Market Reversal Alerts EA over a 5-year period and get a 100% profit result. Very little drawdown. But then I'll stick the same thing on another instrument and it won't do the same thing, because this market doesn't do the same thing every day. These instruments don't do the same thing as each other. But you just need a way to get in and out. And that's all the Market Reversal Alerts EA does. It exploits an edge in the market, which is the bank movement. I know how the banks work. I know how the banks move. So all I've got to do is follow them. I just don't know when. So the blunt instrument is my tool to get me in and out. I am the tool to decide when. This thing's doing my head in, Aussie US this morning. You know, and these are the decisions that you could potentially teach the EA if at London Open, price moves up and down within 10% of ADR and there is no movement within 2 hours, close trade. I could create a rule to do that. But then you're just doing rule after rule after rule, and you're trying to automate and make it so unbelievably clever. At the end of the day, it's green. If I bank that now, I can spend that money on holiday. If I don't, I might be able to get $347 instead of $230. Whoop-de-doo. Do you see what I mean? Doesn't matter, does it? It's insignificant. EAs can't make this insignificant decision, and it also cannot get you out of a problem. And it's very easy. I've got multiple videos on my website showing you exactly how I get out of the problems when the problems occur. We haven't had a problem this month, really. We've had a few things that have got close to possibly being a bit drawdowny, like Euro Swiss, but you know, it's not a problem, is it? Look at it. It's sitting in 0.31% of drawdown, having banked me a very nice amount of money on Friday. But it just so happens I've been in it for ages. You know, and again, what's the decision now? When this thing gets back to there, if I look at my P&L and the Euro Swiss is plus $300 or whatever it may be, when it gets to break even, as a trader, I can make a decision now to go, phew, well, that was a hideous way to make $300, wasn't it? Or I can say, screw you, I want a decent return out of you because you've put me through the ringer for 3 weeks. But that's your decision as a trader to make. The EA can't decide that for you because there's no emotion involved. The EA will be told to get out at a 1.5 ADR or 1 ADR or 3/4 of an ADR in profit, which will be somewhere around there. And it will do exactly that. Blunt instrument. New Zealand dollar yen. These yens are going nuts today, look. Considering I was about to finish the stream about 2 hours ago, it's gone on for about 2 hours, isn't it? So yens are moving a little bit. Actually, it looks like it's not the yens, it's the Aussies. So New Zealand yen pushing hard. No, it is all yens. But some significant movement in the Aussies as well, a bit more extended than the others. Marginally. Let the EA take the trades and add the positions, do the DD control yourself. Yeah, exactly. I mean, the EA does DD control for me as well. Don't get me wrong. Yeah, all these trades you're seeing here are all done by the EA. All these drawdown controls. Yeah. So that one, those. Yeah. So these are drawdown controls. These are just normal drawdown control. All I've got the EA doing is saying if you get 1.5 ADR in drawdown, shut a third of the position off. Just pull your foot off the gas. Take a bit off. Take a bit off. Yeah, that's all it's doing. I am doing aggressive drawdown control. Big difference between drawdown control and aggressive drawdown control. Aggressive drawdown control is executed when you're in an emergency. Or not an emergency, that's the wrong word. When you're uncomfortable. And again, that's why the EA is not able to help. What's uncomfortable for you? You could put a number in that's uncomfortable for you, but that number is different. And until you've done this for a while, you won't realize that number is different each day, each week, and each month. Because at the moment, I'm sitting on 24% profit this month. If this was in 3% of drawdown, that's not uncomfortable. Because I've got 23%, I could just go, screw you, a Euro Swiss, I'm out. And I'll just take 21% this month. If I was sitting in 7% and that was sitting in 3.5%, that's uncomfortable. Because I haven't made much money this month, and I've also got a 3% drawdown, which means I'm virtually almost at a break even for the month. That's uncomfortable, not because it's uncomfortable numbers, it's because I've got a mortgage to pay. Yeah. So this is going to be different for every person depending on their financial situation, what's happened for their month, their week, what the P&L is on all the other positions, how many positions you've got on. There's so many variables. You can't show an EA all of these variables and pick something that's right on every condition. It's always going to be different. Yeah. This last week, this Euro Swiss, I had an opportunity to get out of break even, actually in profit, small profit. I decided not to do it because I had faith in the Euro Swiss. Blunt instruments don't have faith in anything. They're just told to execute based on a line of code. I thought the Euro Swiss had further to go up because I think we've got Euro strength coming off the back of the interest rate rise. It doesn't know what the world economic situation is. And again, you could probably teach it somehow, but it's not a trader. It's a blunt instrument. And it's designed beautifully to get me into positions and gets me out of 80% of the positions without me touching it. But the 20% or the 15% or the 10% each month that you think need to do something about this, you've got to do something about it. Same with the ORBEA, the days where it's like this. Yeah, look at this DAX at the moment. Look at my P&L now on the DAX. Yeah. When that gets to $1,000, I have a decision to make. The EA's decision is made for it. Is that right or wrong? I don't know. I don't know if this is going to get there or not. I could close this now and walk away with a $250 loss. You've got to make this decision. But the EA is trading this for me. I'm not trading this. The EA has taken all of this for me and all the blunt instrument decisions. I know that when the market opens, I want you to take a range and I want you to place the orders, put the stops in place, and I want you to trigger those orders for me. That's all the blunt instruments. So I don't have to do any other work. It's all about reducing your workload so that all you've got to do is watch. Yeah. We're now pretty much up to break even. Shall I hold it? Yeah. Why? Because it looks like it's a lovely break. We've broken the highs. So where are we going to run to? As a trader, I now need to do analysis on the DAX. I need to open this up and go, right, we're at all-time highs. I could teach the EA about all-time highs, but I can't teach the EA what to do at all-time highs because I don't know what to do here. Is this going to rally now and do an ADR today? No. But my decision is going to be based on what else is going on. I've just made $1,700 this morning in futures. That has an influence on my decision. Yeah, so many things that you've got to think about. But hopefully that makes sense and helps. This is why, I never promise anything with any of the products, the EAs that I build, because they are always blunt instruments. And that nothing that's happened back there is ever going to happen again. So you can't, when's the next war going to break out? When is the missile going to go from Russia or Ukraine and land in NATO territory? When's the World War III going to kick off? When's the next pandemic coming? How bad is it going to be? How many variants of it are there going to be? Will the NHS cope or not? I don't know. All of this affects this. Summer trading affects ADR. Sometimes, other times it doesn't. Too many decisions. You can't have an instrument, an EA making those decisions for you. Good morning from Pontevedra. I can't say that properly. Amy, I reduce my risk to 0.1, take more trades and have less drawdown. Less stress. Yeah, stress-free trading. Results are nearly the same, even better. Yeah. And do you know why the results are better, Amy? Did 13.5% in July. That's fantastic. And you're using the air, I guess. But do you know why your results are better? And I'm finding actually, now I'm running this account, which is only taking 0.1 risk instead of 0.25 risk. I'm letting things run because I'm looking at, actually, I shouldn't be, but I am looking more at the profit numbers and letting things run to propulsion. Yeah, let these things run to propulsion because we know they go to propulsion. So, but I'm less stressed or worried about each trade not quite getting there. So I give it a little bit more breathing room and it's actually better. Again, these things, and again, my strategy, my system, I preach in the bootcamp, H4M15 is my bread and butter. It hasn't been my bread and butter for nearly 2 years now. It's been H1M5. I've changed, I've adapted because the market's changed a little bit and I think I prefer this. I might switch to H4M5 or H4M15 again in the future. I don't know. But at the end of the day, it doesn't matter, does it? Because I still have no idea whether H1 or H4 mean reversion is better. They're just different. ADR reversal, which one is better? I don't know. They're just different. They're all systems. Which one is the best one to use next month? Not a clue. Unless someone can tell me what the market's going to do, I can't tell you which system's best, can I? No one can. And this is why that Holy Grail thing doesn't exist. You are the Holy Grail. How did you get the profit and loss to show in the MT4? How did you get the profit and loss? This one. This is the Trade Manager dashboard. This is my dashboard. What do you mean? Definitely not boring. Figuring out your freedom is far from boring. Exactly, and that's exactly the right attitude to have. Trading is boring. Freeing up your time is not. Yeah, there's a very famous saying by a guy that he used to be one of my customers when I ran a web design business. And he set up a website called Time Rich, Cash Rich. Yeah. And that stuck with me like years, 20 odd years ago, whenever it was. And his whole business was not to make money. It was to become time rich. Yeah. And how can you become time rich? The only way you can become time rich is having to eliminate the need to earn money, which makes you cash rich. So he became cash rich by basically buying houses, doing them up, and then renting them out. He got to a portfolio of 20 or 30 properties. So he was cash rich. Because he didn't have now to work, that became time rich. Yeah. Sitting here staring at charts, and this is why I don't like scalping and why I'm trying very hard to automate as much of the 5-minute activity as I can, which is where most of the movement is, unfortunately. But because you can't watch this for 8 hours a day and become time rich. Yeah. H1M5 mean reversion using the EA, I literally could come into this live room once in the morning for 10 minutes, once at lunchtime for 10 minutes, and once in the evening before the London close for 10 minutes with you all for 30 minutes, and I could get exactly the same result. Because I'm waiting for the market to get to where I think it's going, and it will take a week, a day, 5 minutes, an hour, or some period of time, which is undefined, to get to where I want it to be. The EA gets me in. I don't have to do anything but watch this thing. My job is watching this thing. And basically pressing buttons to transfer that thing into that. That's the job. Yeah. I can be very, very, very time rich. I choose not to be because I choose to put my time into developing more ways to be time rich, if you like, which takes my time. But that's what I enjoy doing. I enjoy developing new ways to make money. That's my focus. But this is boring. Doing this is boring. Making money is not boring. But, you know, it's all these people that go and they want to become scalpers and want to trade the 1 minute time frame. What they're trying to do is get one trade that makes them a fortune every day. But what actually ends up happening is they lose that first trade and that second trade. And it ties them into the markets, watching the candles for the rest of the day, trying to get their money back. That's not making you time rich or cash rich. Terrible. But this is why everybody I know in this industry, and it became very clear to me 10 years ago, the money was made on the H1, H4, and daily timeframes. I never found anybody that made money on lower timeframes on the hourly. And that's why I trade H1, M5 mean reversion. H1 is what I'm trading. Swings on H1. I use the 5 minute time frame for my entries using the reversal alerts. But I'm trading the H1. Why? Because I only need to check it once or twice a day. If you're trading H4, you could literally get away with it checking in the morning before you went to work and then checking in the evening before you go to bed. That's all you got to do. And have a look at this thing. But you can't do that with 1% risk unless you've got, well, you can't do it with 1% risk because it's too much. Amy, drawdown is actually 0.63%. Awesome. So you've made 13.5% in July with 0.63% drawdown money. So I'm in profit again. Look, this is weird. This is not the norm. What this means is everything I've done this month is just worked out, which is great. Love these months. I could shut that down now, walk away. I was going to say for the rest of the month. It is the last day of the month. So, and go, yeah, that was this month. Beautiful, isn't it? But this has all been fully automated with me just having a look at it every day. You've seen me. Go and watch, if you're new in here, go and watch the replays for the last month. Every single day, twice a day. They're all on YouTube. Nothing's hidden away. Every single trade I've taken is all there. Every day. Has been for years. But I'm not doing anything clever, am I? I've just automated something that gets me in and out of the market. And I have made my job very, very simple to watch this. That's why I teach people, because people taught me this. Silly question, Evil. Unless you've asked it twice, it's not silly, remember? If by a new royal decree you were forced to use only one strategy for the rest of your trading life, mean reversion, trend pullback, range breakout, etc., which one would you choose? H1M5 mean reversion. This one. Because it can pay the mortgage. Eurozone's just come out, CPI, lots of it. Slight miss. Slight miss on the euro. Uh, 5.3 on a 5.3 forecast, 0.3 on a 0.2, oh no, sorry, it's a slight hit. Sorry, hit. So slightly bullish euro. I read that wrong. Not much, though. It's year on year anyway. Yeah, H1M5, because it's consistent and it's what I've been doing for years. H4M15 or H1M5 mean reversion. H1, I think, is actually better because you get more opportunities to make money. H4 is probably safer from a drawdown perspective. So H4M5 mean reversion, I look as the slightly lower risk version of H1M5. The reason I wouldn't use ORB is because ORB is really good at making lots of money very quickly. But from a consistency perspective, day to day, it's more stressful, higher risk, and harder to do. So it would be this one you're looking at now, which is H1M5. You know, I've had one losing month this month, which was last month, which was 4.5%. Every other month, I've made 10, 15% plus. It's consistent because because there's no stop loss. This is the difference. This is the reason this works is there isn't a stop loss. If there's no stop loss, you cannot get stopped out. You can't lose your money unless you tell the market, I don't want this anymore. The market, as long as it goes up and down, will give you the money. With any stop loss based strategy, you are reliant on the market achieving what your strategy requires to make money. If the market decides it doesn't want to do it for a period of 5 days, you could lose 10% of your account, or 5%, or 3%, or whatever your risk tolerance is. You will lose a percentage of your account because the conditions in the market were wrong. The conditions in the market are always up and down. There are only 3 things that happen. It goes up, and it goes down, and it moves through time. So with position trading, none of this affects our P&L. With a stop strategy, all of this affects your P&L. So if you want something consistent and safe, you have to remove the loss element, which is why the banks do it this way, because it removes the loss element. What do banks not like doing? Losing money or passing on interest rates to us when we want to save money. But anyway, that's another thing. People trying to turn computers into ATMs. Exactly. That's what everyone's after. They've got one. The thing is, people don't realize they've got one right in front of them. Sorry, the DAX is just rallying. So this is the decision. Yeah, the EA is going to do nothing. So right now, if the DAX suddenly goes like that, I'm going to take a loss. I can close this out right now and walk away with a tiny, tiny micro loss today. Or I could leave it until I get to there. Or I could let the EA play out. There's all sorts of decisions I need to make as a trader. None of them are right, none of them are wrong, because I don't know what the next candle is going to be. Is it bullish, bearish, or is it going to be a doji and no idea? I don't know. My decision is literally a case of, now, do I want to bank this little bit of profit, or should I let it run? In 5 minutes' time, my decision will be different, because I will be less than that. So now, do I want to bank this little bit of loss, or do I want to let it run? In 10 minutes' time, my decision will be different. EAs can't analyze. They can't do this. And before you say AI is not any better than any human. In some respects, it is. But in this respect, it's not. You've got an AI. You've got EAs. EAs are AIs, aren't they? They're to a certain extent. It still requires brain power and physical movement. Exactly. Everything does. Not many jobs in this world that you can just make money, and not do any work. That's why it's called a job. We don't live in the Star Trek era where you've got a replicator and therefore you don't need to buy anything. If you don't need to buy anything, you don't need money. If you don't need money, you can do whatever the hell you like, can't you? Unfortunately, I've got a mortgage to pay. Although I'd love to live in Star Trek land, it's not going to happen. Thought feeder. Question regarding the size of account. If you are consistently profitable, do you ever feel having 100K is too much? You can run more risk by reducing your account size. You can run any risk you like. The difference between running a large account and a small account is the amount of money literally in your broker. So I don't keep all of my money in my broker, because if something was to go hideously wrong, I've only lost a portion of it. I can always add more in. But if you put all of the money in there, so what you can do is that if you had, let's say you had a 30, what am I doing over there? It's a calculator. A 30K account, right? You could put 10K into your broker account, keep 20K in your bank account, but 3x your risk on that 10K. That gives you the same equivalent of trading a 30K account, that you only have to put that much into your broker. So you can run you can virtually run any amount of money with any amount of money in a broker account. But obviously the problem you're going to have is leverage. And margin. If you get to 10K in drawdown, you're actually only 30% in drawdown on your account, aren't you? But you're 100% in drawdown on the amount that you've put in. So difficult one to answer, but this is why you focus on profit percentage. You don't focus on money. Focus on this, because this, yeah, doesn't mean anything. Look, that money, whether these figures here, right? Whether those figures are $100, $1,000, or $10,000 is irrelevant. They are a percentage of your account balance. If you focus on percentage return, this is irrelevant. This is why we don't focus on trying to make an amount of money. We focus on trying to return a percentage on our account. Because if you're trading a 100K account and you return 10%, you return 10K. If you are trading a 10K account and you return 10%, you return 1K. But in both of those instances, you've returned 10%. You've done the same job. The only difference between the financial reward is how much was in there in the first place. You focus on returning a percentage, which is 0.5% a day. You've got to make 0.5% a day in 20 days to make a 10% return on your account. If you've only got 30K to trade with, you could up your risk, and that 10% instead of being 3 grand becomes 6 grand or 9 grand. There's all sorts of ways you can juggle it, but at the end of the day, it's risk. Everything is risk. Every penny you put into this thing is risk. You're taking a gamble. You are literally going red or black. And if it comes out black, you decide whether or not you go red or black again. That's the decision you've got to make. It goes up and it goes down and it goes through time. That's all that happens. You just got to get into it and wait for it to get out. You out. Dow's just made a new high of the day. There you go. So TP hit. DAX ORB. So DAX ORB short, stopped out, ORB long, TP hit. So now I'm sitting in $195 a loss. And my decision now is, do I fancy banking 800? Or shall I just let this thing run? I don't know. The EA, if I now, but you see, the thing that I'm doing here, you're seeing me do it. I'm not making any decisions. I'm monitoring. My job as a trader is monitoring my P&L, what's going on. That's literally all you've got to do. At some point, if this thing suddenly goes and puts a whacking great bearish engulfing candle in, yeah, I'm just going to go, screw it, pop that over there. The market's given me what the market's given me because of that bearish engulfing candle, not because of any other reason, not because I'm using the ORB EA or the TP was that far away, this far away, whatever. The market's given me that because I pressed the button and I was happy with that amount of money. Look at my stop loss. Break even. Worst thing that can happen to me right now, very worst thing that can happen is I'm going to bank $173, which puts me pretty much break even for the session. Worst case scenario. What's right to do now? Your choice. No one else's. Yes, the EA's taken the trade, but you're the decision maker based on the monitoring that you're doing of what is going on in your P&L. That's the key. P&L. Market will give you what the market will give you. You don't have a choice in that. I trade H1M5 and sometimes ADR reversals if there's not enough RSI possibilities. Yeah, so if that's, again, going back to what we were talking about at the beginning, RSIs are pretty flat at the moment. New Zealand dollar yen is one. I'm going to get into a long on New Zealand yen, potentially, if this keeps pushing. So if this continues to push up, I will take a short. But I want it above 75. But, you know, if you see a load of RSI 70s light up and ADR hits going off and there's no trades being taken by the EA in my case, because I haven't hit the 75 level, and I see this happen for a week, I have to make a decision now. What shall I do next week? The EA will sit there and go and do absolutely nothing different for 3 weeks. So your P&L with the EA might go like that for 3 weeks. My P&L with the EA will go like that for 3 weeks because I'm watching and making a conscious decision. You can't have the EA make this decision for you. You've got to be involved. It's just using your head. That's why you got it. If I'm bored of staring at the charts, I go to the beach. Exactly, yeah. Do something else. That's why I'm talking this morning, because there's nothing to do, is there? Literally. This is why I sit in here and I talk all the time, because I've got nothing else to do. I'm watching the charts. Might as well talk to you lot. Or you might as well just listen to me waffling on. Morgan Doug, I try to restrict myself using just a few assets. I'm trading euro, US dollar yen, pound yen, NAS, gold, and Aussie CAD, and pound US, yeah. Do you recommend expanding? Yes. So let's have a look at the P&L for this month. So you're not trading Aussie New Zealand, are you? No, so you missed that $70. You're not trading Aussie US, so you missed all that profit. You're not trading CAD Swiss, no, you missed all that lot. CAD Yen, no, you're not trading that, so you missed all that profit. It's $2.5 grand there, look, on that trade. You missed that, and that $1.5 grand, you missed that as well because you're not trading that. Same point. Why limit yourself? Why are you going to make money out of those? Let me ask you this question, Morgan Doug. Right? What if euro, US dollar yen, pound yen, gold, Aussie CAD, and pound US dollar for the next 4 weeks do this? But all the other pairs you're not trading do this. What's your P&L going to look like? And what's my P&L going to look like? Yeah. Do not specify what you trade. The market specifies what you trade. Your job as a trader is to make money out of market movement. You trade what moves. This is what this dashboard is telling me. What's moving? New Zealand dollar yen. Right, so I've got an opportunity to get in the New Zealand dollar yen because it's moving. What isn't moving? Euro pound. It's totally flat. Watch. I can tell you because I can see the RSIs. It's totally flat. I haven't looked at this morning, have I? I can tell by the RSI numbers. It isn't moving. What am I not trading? This. What opportunities I have got to trade? That. Do not limit your pairs. You've got 28 opportunities to make money. If you only choose 5 of them and those 5 go sideways for the month, you will make 0. If everything else you're not trading goes nuts, you will make X. Don't know what that's going to be, but at least it's bigger than that. Do not limit your pairs. Trade what moves. Yeah, Aussie New Zealand's is an opportunity at the moment, and so is New Zealand dollar yen. If you want to look at 5-minute intraday opportunities today, it's this lot. Euro US dollar, you're sitting there at the moment watching Euro US dollar looking for a trade on it because you trade Euro US dollar. What is Euro US dollar not doing today? Moving. I can tell because it's done 30.9 ADR out of 83. Hasn't gone anywhere. I haven't looked at it yet, but I can tell you it's not going anywhere because it hasn't moved. Volatility. The only way you can possibly make money in the market is by buying at one level and selling at another. What does that require? Movement. News, volatility, everything that happens in this market that makes us money is because A and B are different places. If A and B are the same place, you cannot make money. Trade the instruments that move. Get the RSI dash, get the ADR dash. Wait for it to tell you that this has been moving. Excellent. If it's been moving in one direction, the next direction is going to be the opposite. Why? Because that's what it always does. Every time it moves in one direction, it has to go the other way to take profit. So if we just watch for things that have gone in one direction, we know which direction is coming up. Not rocket science, but you've got to trade the stuff that is going in one direction because that's how you make money. It's boiling this job down to its simplest form is a case of waiting for something to move in a direction, pressing a button, and then sitting and waiting and watching a number appear to a level that you are happy before you put it in your bank. That is this job boiled down to its very basic form. So first thing you've got to do is have something that's moved so that you know that it's moving, because the only way you can make money is to identify things that are moving. Think of it like fishing in a pond. Yeah. You're sitting there, it's dead flat. You see a splash over there. Where do you cast your line? I don't fish, but I'm just using logic to take that if something splashed over there, there's a fish, I'm going to have a go at that one. It's not so difficult, is it? So now I sit there and I watch. All of a sudden, the fish bites, and I'm like, excellent. I'm going to reel that in now. And that's it. That's my job. I'm fishing for stuff that's moving up and down so that I can extract money out of it. You only trade one instrument and that instrument doesn't play ball for a month, you're stuffed. You're dead in the water. Again, all these EAs you see out there, what pairs should you use? You should use Euro US dollar, Aussie CAD, and New Zealand dollar yen. Why? Because those are the only ones in the back test that made money. So it's not a very robust strategy, is it? Well, no. Right. Well, what if those don't make money for me this month? Well, the EA won't make money, but all these other things are moving. Oh, it's really simple, isn't it? Think about it. You're just strangling yourself. No reason to do it. Franco, I am the engulfing candle. Yeah. The engulfing candle is the trader's nightmare, yeah? Because every time you get one, it's an immediate get out of your trade or go in that direction. What an engulfing candle is a short-term profit take on a long-term move, which is why trading bearish engulfings most of the time, sometimes they work, look, most of the time doesn't work. Same as shooting stars and hammers. They work when they're at the top of a chart. When they're in the middle of a chart, what they are is indicative of strong buying. Do the opposite. Yeah, I'm not selling this. Reason I'm not out of this, because that's just a pullback. Created a propulsion gap, which is an area of buying. Now, if this puts in now another low here, I can move my stop very safely up to there and go, right, well, if it breaks that low, we're probably going to start to reverse. But that is the move at the moment. Yeah. And again, I'm doing that. The EA's not. I could teach the EA to do that, but there are 1,000 combinations of candlestick patterns that could occur that would make me want to do this. And I've also got to teach an EA the distance between the body, the wick high, the wick low, whether or not that one is piercing the middle of that one, or it's got down into there, whether it's created a gap, or whether it's done this. See what I mean? There's too many things. Too many things and too many rules. And you get one rule come up and you go, right, EA should be shutting this out now. But hang on, there's a news event in 2 minutes. The EA doesn't know about that. Yes, you can teach it about news, but what happens on that news and what the market does after that news is going to be giving you another decision to make. It's all about decisions. At the end of the day, your decision is, do I want this over here or not? Do I think this is done enough today based on ADR and the things we know historically that give us an edge in the market? That's it. You are the engulfing candle. GJ, not done a lot. Pound yen's moving, obviously, that's ADR. All the yens are moved. So all yens are ADRs today. Opportunities to short them, all of them. Amy, Lee turned me into a profitable trader within 1 month watching the bootcamp and these live sessions after 3 years of system hopping. Yeah, exactly. That's what you do. You system hop, looking for the system that makes you money, where you realize they actually all make you money, but the only reason they don't is because you put a stop loss. Then you take the stop loss away and all of a sudden you make money. Then you realize that no system works because the market just moves up and down at random. Therefore, all you got to do is press the button and wait. Really simple, isn't it? The boot camp's like 12 hours long or something stupid, isn't it? But at the end of the day, the message is it goes up, it goes down, it moves through time. And if you use one of those, it will get stopped out and you lose money. That's the basic message of trading. Is there any reason why I shouldn't compound an account? Because you can't. Tom, try it. Try it. Just try it. Go and get a demo account and try and compound it. Try and double it. And then try and double it again, and then try and double it again, and then come back when you've doubled it 3 times and tell me that you've done it, and then I'll start listening to you. But until you've done that, try it. I've tried it. But if you want to use the market reversal alert CA to compound it, Yeah, try it. The trouble with compounding is it works on paper, assuming that the market conditions are correct. But the only trouble with compounding is it only works on paper, assuming that the market conditions are correct. So it's its own fault. It's its own enemy, because what you've seen in the past happen isn't going to happen there, is it? So the logic is that you basically risk a high amount and then double the account. But you will hit a point at some time where the system will fail and blow the account. There's a guy that sells compounding courses. I follow his Telegram channel. He admits in his compounding course that he blows accounts. Does that sound like a responsible way to trade? Why did people buy this course? Is the first question. Really? Somebody comes and says, I've got this really great strategy. Sometimes it works, other times it blows your account, you lose everything. It's only $200. Do you want to buy it? Oh, yeah. Honestly, just don't get it. Amy's, oh no, Amy's back. Everyone's talking to Amy now because Amy's just said she's made 70. I like the way that, right, Amy comes on and she says, I've made 13% a month in the last month in July, right? I'm sitting here in front of you showing you that I've made 24%. Everybody wants to ask Amy questions. Well, me. I'm only joking, Amy. H1M5, yeah, exactly. How many trades have you taken? That is also a question I get asked over and over again. How many trades do you take a month? As many as the market sets me up with. There's no answer to that. Like, thought feeder, you just asked Amy. She says about 60. You know, how many trades have I taken this month? I'd have to get them out. I'm going to have to put that into Quant Analyzer and find out. But you know, the number of trades you take a month is always going to be totally different each month. And trades and positions are very different things. And types of trades as well. So that's my month. I've taken 215 trades this month. Amy's done about 160. So just give the mic to Amy. I can give the mic to Amy. Amy can become my new guest speaker. But look at the that's what do I want to do? I want to move that over to that. No. That. Yeah. So that's the actual trades look. So of all the instruments this month, I've traded 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 20, 21, 22, 23, 24, 25, 26, 27, 28. How many FX pairs have we got? Ta-da! This month I've traded every single instrument. So going back to what you were saying earlier, Morgan Doug, there's your answer. I've traded 28 out of 28 instruments this month. Because they all, at some point this month, gave me an opportunity to get in. Yeah. The only ones I've lost on have been CAD Swiss. I've lost $1,000. I've lost 1,500 on Euro Swiss. $73 on Pound Swiss. I've lost 1,800 on Pound Yen. And I've lost 173 on US Dollar Swiss. So of all positions this month, 28 positions taken. Well, no, that's not true. 28 pairs traded, multiple positions, but 5 losing instruments. Now, again, going back to what we were talking about earlier with backtesting, if this is my backtest, what am I going to do now? Do I now go, right, I'm not going to trade that, or those two, and that one next month, right? If I go and look at last month, I will have made money on the CAD Swiss, the Euro Swiss, the Pound Swiss, and the US Swiss. Why? Because the Swiss franc this month has had what? Bit of a squeeze. Why have I made loss on those? Because the Swissy squeezed me. Did the Swissy squeeze me last month? No, it's lovely. So what did I do last month? Made money on the Swissy. So should I eliminate those from my portfolio? No. But if the Pound Swiss, I look at my portfolio over a period of 6 months and I have 1 winning month and 5 losing months on the Pound Swiss, that tells me that I'm not very good at trading the Pound Swiss, or the strategy is not very well suited at the moment for the Pound Swiss. Does that mean that I should never trade it again? No. Last 6 months, it's not been great. But look at the 6 months before. It made a lovely profit. Well, lovely profit, and then a bit of a loss. So probably not good, is it? It's break even. So let's look at the last 5 years on the Pound Swiss. Is it a profit overall or a loss overall? Profit overall. Okay, the edge is there. Backtesting. This is what it tells you. You can't rely on any backtest to tell you anything reliable about what's going to happen in the future. Some months are going to be amazing. Some are going to be crap. I've made 4.5 grand out of the CAD yen this month. By far the biggest winner this month. No, sorry, Euro yen, 9 grand, 9.9. Made 10 grand out the Euro yen and 5 grand out the CAD yen. So look at this 24 grand profit. 15k of that is 2 instruments. Again, going back to what you said about should I expand my portfolio? Which instruments next month are going to make you 10 grand? If you don't know the answer to that, you've got to trade them all. Because you don't know what's going to make you money. You don't know what's going to move, do you? You've got to be able to analyze all this information and understand it. And it all takes time. How's the Sharpe ratio? 3,900 on the Euro odd. Someone's got a problem with their calculation in there. That's not right, is it? Yeah, so that's this month. Look. But last month was over half the positions last month were negative. It's just a horrible month. Nothing you can do. Deal with it. You're only as good as your last month. Last month wasn't very good. Right, I'll leave it there today. We've talked about everything basically to death today. Good session today, though. Always good to get verbal diarrhea out on a Monday morning. DAX is pulling back down. So what I'm going to do with this now is 115. I'm going to put 100 or 11-point trailer on it. There we go. So basically, this is pulling back. So either this is now going, this is higher session, and we're just going to meh, or it's going to pull back. We're going to find some buyers out of this propulsion gap, which is that high, and we'll rally. And if we rally, I'll go with it. But I think we're probably going to run out of steam now. So either bank that, which is that much profit, or which is pretty much going to be about $500, so it'll be about $300 session. Or it will rally and I'll go with it and get out at some point later. Yeah, but I don't know what it's going to do, so I'll just let the market hand over the cash as and when it's ready. Right, I'll leave it there. What do you know about private servers gurus used to fake $5,000 to $500 to $5,000 videos? What do you know about private servers gurus used to fake? Nothing. Yeah, I don't know how or what, but I've heard of it. I think ICT got accused of it, didn't he, at some point, of showing an account in MT4 that was fake, basically, somehow. I don't know how you do it, though. But, yeah. I think it was ICT. Somebody got caught. Basically, there was when you make a deposit and you get a rebate, so trying to find There you go, rebate, look. So when your broker gives you a kickback off of your, so a balance adjustment basically, which is interest, you get a rebate every month on your account. When you do a deposit or something, it puts it in as a plus or a minus or something. And I think what that person got caught doing was showing their P&L, and when you get a rebate or something, it should have been a plus, but it was actually a minus or something. So it was proved that that was manipulated, something like that. I don't know, Franco, you can probably tell me more about it. But I've seen videos about people, yeah, there's ways you can set up your own broker kind of server, if you like. And obviously, at the end of the day, that's a database, isn't it? So all the trades that you take are a database of numbers. So you could adjust that to be anything you like. There's and this is all these signal services you see running in Telegram and stuff. A lot of the times you'll get a signal and you'll see it appear and you'll go, right, I'll take that. And it gives you the stop loss, the take profit and everything, right? And then it plays out and then they close that out for X pips in profit. And you'll close it out and go, I didn't make that much profit. And you go back and look at the signal and it's got a different TP. You're like, oh, I must have put the TP in wrong. Or the stop was different. And you like, hang on, I got stopped out on that. They didn't get stopped out. Oh, I put it in wrong. They go back and adjust it. So in Telegram, you see the edited date and time and that sort of thing. It's really obvious, but if you don't know about it, it's not obvious, is it? There's all sorts of things that can go on. You know, but people could accuse me of doing the same thing. But then again, I do this every day. I'm in here every day. I show you this every day, right? So if you really want to verify it, go back and watch every single replay of every single live room. I haven't changed any of that. It's all there. Same trades there. All these trades were here on Friday and they were all there on Thursday. Go and have a look. They were all in different numbers on Thursday because the market was in a different position. Just can't be bothered with it. You know, there's too much. There's enough smoke and mirrors in this industry without having to try and falsify results. And then, I don't know, they're obviously selling courses, aren't they? You know, these people that do that, they're selling something that means they need to prove that something's happened that didn't happen. I'd much rather show you the fact that I lost 0.5% last Thursday because the market was crap. It happens. You're better off knowing that, aren't you? Real world. Right, I'll leave it there. I'll be back this afternoon at 2:20 for the New York session. Anything you need, come in Telegram. I'll be in there. Other than that, yeah, hopefully we get a little bit more movement this morning, but I'm stopped out on the DAX. There we go. So flat on the DAX, small profit this morning. But yeah, I don't anticipate a lot today because there's no news. So we'll have a look at the US indices this afternoon. 2:20, back tomorrow morning, 7:50, same time for Frankfurt. And I'll be in Telegram till then. So I will see you guys soon.